2025 Spring Investor Advisory Group meeting. My name is Saba Kumar. I'm the co-chair of the Investor Advisory Group. On behalf of my co-chair, Amy McGarity, we would like to extend a warm welcome to you all to today's meeting. We have a full agenda, but before we dive into it, I'd like to note our standard disclaimer that the views expressed today are my own and they do not reflect views of the PCOB board or my dear colleagues. I'd also like to take this opportunity to officially welcome new members of the IAG, Steve Lipner, Stephen Gray, and Satyam Khanna. Welcome. Second, I'd also like to say thank you to all the panelists today in advance. They are going to be discussing very important and timely topics. And finally, I would like to give the floor to Chair Williams for her opening remarks. Chair Williams.
Thank you, Saba, for that introduction, and thank you, Amy, for your service as co-chair. It's great to join the IEG today, and I want to especially welcome our newest members. Thank you for volunteering to your time and energy on behalf of investors. The work you do as part of the IEG is valued and very much appreciated. Before I begin, I must also provide the usual disclaimer that the views expressed here are my own and do not necessarily reflect the views of my fellow board members or the talented and dedicated staff of the PCAOB. For years now, you've heard me raise the alarm about the troubling trend in audit quality. In 2021, our inspectors began to see an increase in deficiencies across the firms that we inspect. And that trend continued in 2022 across smaller firms in 2023. And the PCAOB demanded better on behalf of the investors that we serve. And today I am able to report that our 2024 inspections found significant improvement across firms. This includes an expected 7-point drop in the aggregate Part 1A deficiency rates across firms inspected and a 6-point drop among the 4 largest firms, which at the end of last year collectively audited approximately 80% of the market capitalization of public companies listed on exchanges. This is meaningful progress in our effort to protect investors in U.S. markets. Still, while deficiency rates have dropped significantly, they remain too high. Our work is far from over, and today that work is as important as ever. History tells us that when the economy is tight, the risk of fraud goes up, companies have targets to hit, and when they can't make their numbers honestly, the temptation to cook the books is always there. Fortunately, so are we. The PCAOB standards set rules of the road for auditors that they must follow to ensure financial statements and related disclosures are accurate. PCAOB inspectors are watching to keep them honest, and the threat of PCAOB enforcement deters wrongdoing that puts investors at risk. So like many of you, I am deeply troubled by draft legislation being considered by the House Financial Services Committee that proposes to eliminate the PCAOB as we know it. The SEC was my professional home for more than 11 years. I have deep admiration and respect for the incredible professional staff there. They are all excellent at what they do. It is different from what we do here at the PCAOB. The unique experience and expertise built by the PCAOB over decades cannot simply be cut and pasted without significant risk to investors at a time when markets are already volatile. The disruption to inspections alone, while a new program gets set up and running, could last years. We do not have to guess what could happen in the interim when no one is looking. We already know from the accounting scandals of the early 2000s from Enron and WorldCom that brought us to where we are today. Investors lost billions of dollars in savings, workers lost their jobs and their retirement, and trust in our markets eroded. It takes a minimum of 480 experienced staff to conduct inspections required by the Sarbanes-Oxley Act, not to mention hundreds of other staff who support those efforts and make it all happen. And hiring them would come at considerable cost to the SEC. That is assuming it is possible to hire them at all. As we will hear more about later today, there is currently an industry-wide shortage of accounting and audit talent, and our team members are some of the most respected and employable members of the profession. PCAOB inspection staff averaged 22 years of experience, including a decade in public accounting before even joining the PCAOB. They have experience in more than 30 different industries, from banking to energy, and expertise across 40 different subject matters, from revenue recognition to derivatives and technology. They speak 33 different languages. That language expertise is necessary because the PCAOB regularly conducts inspections in more than 50 jurisdictions around the world. Local laws in many of those countries require cooperative agreements that the PCAOB has secured over years of negotiation to ensure that we have the access necessary to inspect and investigate completely. None of the agreements contain provisions that will allow the PCAOB's privileges and responsibilities under the agreements to be transferred to the SEC. They would have to be renegotiated before inspections could be conducted, which could take years. Of course, this includes China, where for the first time in history, the PCAOB has been successfully inspecting and investigating completely, holding Chinese firms accountable and bringing historic enforcement cases. The PCAOB secured every concession we demanded from China in the Statement of Protocol that facilitates our access to inspect and investigate completely. We have their feet to the fire. Scrapping that agreement and starting over gives China the opportunity to exploit the uncertainty in order to avoid scrutiny of its audit work once again, to the detriment of investors. These are just some of the exchange challenges posed by elimination of the PCAOB. Of course, our inspections program is strengthened by tough enforcement carried out by our expert investigators. And without the talented team working to keep PCAOB standards up to date, there is nothing to inspect against. Every member of the PCAOB team plays a critical role in executing our mission of protecting investors on U.S. markets, and they are irreplaceable. Before we dive into today's meeting, I want to thank members of the IAG for the feedback you provided us about ways we can make PCAOB data more useful for investors. Yesterday, we published new and enhanced downloadable data sets that you asked for. These data sets are machine readable and contain public inspection information from inspection reports going back to 2018 for annually inspected firms and 2019 for triennially inspected firms. We plan to update these data sets on a quarterly basis going forward. The PCAOB under this board continues to make transparency a priority. We continue to work to better tell the story behind our inspection reports, what they mean for investors, how firms can improve, and ultimately how users can better understand the results. Since we met in the fall, our staff have also been working hard to provide firms with resources to implement the new standards and rules undertaken by this board. Our staff has published guidance documents, expert recordings, quizzes, and materials on QC 1000, AS 1000, and other new standards and rules, all of which can be found on our website. We are also expanding our support for smaller firms by hosting multiple in-person forums across the country for auditors of smaller companies and broker-dealers. In fact, I kicked off this year's forum in Chicago earlier this month, and Board Member Bodick will host our second forum of this year this Thursday in Jersey City, with more planned for later this year, all hosted by board members. Additionally, we're planning 2 workshops, one on May 13th in Washington, D.C., and another on June 17th in Irving, Texas, to assist smaller firms with QC 1000 implementation. Even more information, resources, and tools can be found on our website, including ways for firms to contact us should they have any questions. Ultimately, we want firms to be successful in properly implementing these new standards because that means investors are better protected. Again, I want to thank the IAG for your continued work highlighting investors' need for more transparent information from audit firms. We too continue to search for ways to bring our insights to investors audit committees, and other stakeholders, and we will soon publish our latest spotlight detailing our conversations with audit committee chairs. I found the conversation that we had last fall on the role of audit committees to be fascinating and incredibly important. I'm also glad we will hear from you all about AI and emerging technologies today, which is, of course, a focus area across the PCAOB. As markets evolve, innovation is essential. And when it comes to auditing financial statements, it must always be done with an eye toward the ultimate purpose, and that is to protect investors. This means firms must have strong controls in place to ensure they are meeting their responsibilities to investors and complying with PCAOB rules and standards anytime they are considering using new tools, whether it is AI or anything else. Finally, I'm looking forward to your presentation on the talent pipeline and its impact on audit quality. This is something I hear about nearly everywhere I go, and it's something the entire industry is focused on. And I look forward to today's presentation on this important topic. With that, we have a packed agenda today. So Saba, I'll turn the things back over to you. Thank you.
Thank you, Chair Williams. Next topic on the agenda is IAG's presentation to the board entitled Investor Expectations of an Audit. This topic will provide insights into investors' expectations of an audit, the role of audit quality in instilling confidence in companies' financial disclosure. This discussion will be led by an esteemed IAG member, Mary Bursell, who currently serves as an Executive Vice President of Ballard, IAG Co-Chair and CIO of Coopera, Amy McGarity, and Sandy Peters, who leads the CFA Institute's financial reporting policy. With that, I will give the floor to Mary. Mary, please take it away.
Thank you, Saba. And I'd also like to say welcome to Chair Williams, the board, and the staff of the PCAOB. We are pleased to present to you today a panel discussion on investor expectations. But before we begin the panel, I would like to make a statement on behalf of the IAG in support of the PCAOB in facing the proposed legislation to essentially do away with the PCAOB and merge into the SEC. We really believe the work that the PCAOB does, its independence, and its inspections really improves the likelihood of protecting investors from situations such as Enron and WorldCom. Chair Williams, I thought your discussion of the value of the PCAOB in the recent past was excellent. We support you, and we hope that this proposed legislation will not be included in the tax and spending bill. With that, I'd like to introduce our panel today. The topic is investor expectations. The capital markets and investments in general have become far more complicated. Corporations are not as simple as they once were. We're dealing with new technologies, new innovations. The audit is increasingly more important as we move forward. And the quality of the audit is ensured by the PCAOB. And in that sense, we feel it's important as a group, as the IAG, to share our views of what investors expect from the audit. We conducted a survey, which Amy will go into detail, to solicit the views of all of the members and at the same time get us all thinking about how we view investor expectations as it relates to the audit. So with that, I'm going to turn it over to Amy, and she will take us through the introduction of the survey and help lead the discussion today.
Great, thanks, Mary. And thanks also to Sandy and Mary for the idea of this panel. I think it's especially timely given the new members to the IAG. So welcome to those members. And also, I just wanted to underscore how grateful we are as an investor community for the opportunity to engage and collaborate with the board of the PCAOB over the past several years. I think we've made a lot of progress. We've learned a lot from one another. And I, for one, have been very appreciative of the opportunity to be involved in this very important work. As Mary indicated, the evolving nature of financial markets really benefits from iterative and collaborative discussions amongst market participants, really to ensure investor protection. So Sandy worked really, really hard to put together a survey. I think a lot of the IAG members did fortunately participate in the survey. So I have crafted a number of questions to try to consolidate the questions that were in the survey to bring out the investor perspective for the benefit of the other members of the IAG and hopefully the board and other stakeholders who are interested in the investor community and the perspectives. Hopefully, we will have an illuminating and productive discussion. And because we don't have assigned speakers, please chime in, raise your hand, or if I don't see your hand because I'm busy navigating the questions, please just chime in. If no one really responds, I'll just call on people. So be forewarned. I know we're a bunch of experts on this call, so hopefully I know we all have opinions and we'd like to hear them. So with that, I'm going to kick it off. We have it divided in essentially three areas, but there's a lot of overlap. Outlining investor expectations of the audit committee and auditor, and then PCAOB and regulators. We'll end with that, which may ultimately be quite a lengthy discussion. So we're trying to divide it up somewhat equally, but we'll see how it goes. So first off, the survey, one of the areas were really what do investors expect from the audit? It seems that some committee members would like to see updates made to existing audit standards. And I really thought it would be important for us to highlight any specifics that the IAG has as it relates to updating existing audit standards. Does anyone have any thoughts on that particular topic?
If no one's going to say something, I might as well say something.
Thanks, Ken.
You talk about standards, right?
Yes.
Yeah, no, I think I would say just in general, because I'm not going to talk about specifically. I have remarked at how old some of the standards and how long they had not been updated before the current version of the PCAOB team had been put in place. And so when I see some of these standards that hadn't been either looked at or updated for 20 years plus, and the world changes so dramatically, you just look at what goes on today in technology. And so I'm just making a comment that I do applaud the PCAOB for taking one after another to update the standards to make them technologically current, current relative to, the accounting that is today's world. Certainly, it's amazing how fast companies think about things, change and evolve. Some of these standards may not, need, full rewrites, but as I'm just to be very clear, I'm not a CPA, I'm a practitioner, and as a prior CFO, and I applaud when I see the new standards, and I read many of them actually, and I think they're very, very well done. So I actually think this is a critical aspect of the performance of the current PCAOB in terms of updating standards that I'm amazed it hadn't been looked at for literally decades. I'll stop there.
Thanks, Ken.
I want to at least have someone talk.
No, I appreciate that. I'm grateful. Go ahead, James.
Thank you very much. I think it's also important to note that many of the standards have in fact been updated by the AICPA. So the PCAOB took the standards more than 20 years ago. And for many of those standards, the AICPA have updated it, but for some reason, the industry pushes back on the PCAOB updating the very same standards. And it's almost as if there's an issue if there's going to be enforcement of the standards when you're actually comfortable with some of those standards. And I think when we look at what standards could in fact be updated, I think it's easy to look at some of the things that have already been updated by the AICPA and whether there is a meeting of the minds in which there's a low touch way of just bringing those standards over. That's not what was planned. I mean, I think what was in fact intended was to make those standards more investor friendly. The problem we have, though, is that investors aren't heavy commenters on the standards and aren't heavy advocates for what they need. And the industry more so controls how they are going to be regulated. But in this particular context, whenever there's an opportunity to actually enforce it, they really push it back. So I mean, I think we can look at some of the AICPA standards and that have been updated in the interim since the PCAOB came into being as continued low-hanging fruit. And so basically, I applaud the valiant attempts that the PCAOB has made to do exactly that in some context to fulfill what I think was an appropriate requirement given the activities that brought the PCAOB into being. So thank you much.
Amy, I have a comment.
Yeah, go ahead, Gina. Thanks, James. Go ahead, Gina.
Great comment, James. So I think, and I speak from the perspective of both an investor and a technologist. I also think that the regularity and the necessity for more frequent updates is only going to increase as technology continues to impact how the industry conducts itself, how investors interact with technology. I do think that it actually creates an imperative to continue to stay on top of the latest efforts that are being made on a technology basis. I think that's of utmost importance. And so staying on top of the latest innovations will impact how we think about oversight and audit.
Great. Thanks, Gina. Anybody else on this topic? I think what came out of that conversation for me is that the incredible dynamism within the markets are really underscoring the need for constant communication, discussion, collaboration on these topics. So it just kind of underscored it to me. I really appreciate the IAG members' views on that. If no one else has anything on that one, oh, go ahead, Sandy. You're on mute. There you
Right,
go.
I'm trying to figure out how to raise my hand on WebEx. I'm less skilled at WebEx, so apologies for that. I thought it was really interesting. We asked questions as with respect to who is the auditor's client and the value of the audit. And I was really intrigued by that there was significant dispersion with respect to whether the IAG members said, we ask, what value do you believe investors place on the audit? Very high, high, moderate, or low? And it was about evenly distributed. And there wasn't a majority of people who believed that it was high or very or very high, or it was maybe just a majority of people. And I think that that's a real indicator for the profession of the value of the product that they're providing. And I think we also ask who's the auditor's client, and while a good number, almost a majority, was investors, it was also audit committees, and one person said CFO. So I think it's interesting that there was a dispersion around that question, or those questions, right? Who are we engaging, and do they actually value the audit? We also asked some questions with respect to whether investors supported greater information to execute their stewardship responsibilities, and there was general agree and highly agree with respect to that. And do they need more information also to appropriately value the work of the auditor? The answer was it was actually one of the highest, about 70%. So I think in that there is, when I look at this and we talk about the audit, it seems as though there needs to be more information so that investors can actually value the audit, is what I look at, what the majority of what the respondents said. Obviously, it's just a sample of this group, but sort of reflective of some of the things we've seen in some of the commentary on recent standards. So I would just toss that in.
Thanks, Sandy. That kind of leads me into the next point I was going to highlight under the investor expectations of the audit. It is to that point that you raised about who the client is. I found the answers, the dispersion there, very, very interesting, given that, you know, it was not all investors, which I think really does represent different viewpoints of even the IAG. So I would like to illuminate some of those. You know, a couple people had CFO, a lot of people had the audit committee, and then a number of people had investors as the ultimate client. I think that the reason that's interesting to me is it sort of indicates what the objective of the audit is. So I just thought, you know, does anyone want to discuss their views on this and why they may have chosen one versus the other? I think it might be helpful for all of us to understand those different perspectives of the members of the IAG. That was the most provocative of the questions in my mind.
So Amy, this is the other Sandy.
Hi, Sandy. It's nice to see you
How are you?
or hear you. There you are.
So I believe I responded CFO. I also responded audit committee chair and directors. I believe my memory may not be as fresh as it when I was younger. And I've had this conversation with George Boddick before. There is a significant distinction in the investor class between the typical investor and the professional investor. I would argue the typical investor has no ability to discern the facts from financial statements as they are so complicated and broad. So, you know, if you believe that professional investors like CFAs have a complete understanding, I would say they are a client of the auditor. But I also believe in kind of this delegated capitalism question. Investors go to, you know, they vote in their proxy and they say, yes, we're going to allow the audit committee to hire this auditor. We approve of it. They designate the directors they vote for. They designate their votes for audit committee chair. And I consider that a delegation of authority. And therefore, when the auditor is actually retained and paid, it is through a resolution of directors or the audit committee and paid by the CFO. So if you just took a standard business approach to whose is the client, it is the professional executives of the company. And then I would, this gets tangled up also into one of the questions about who talks to investors, right? Mm-hmm. So I've been a CFO and CEO of a public company and an asset manager. I would say, and George has heard me say this before, if I was the CEO of a company and I heard my auditor was talking to investors, I would fire them immediately. If I heard my CFO was talking to investors, I know he understands Reg FD. I know he understands how investors think and how to communicate what the company does in a way that is fair to all investors, Reg FD. And I would also say, I mean, the audit committee chair, I wouldn't want them talking to investors either. I wouldn't want my directors to be talking to investors unless they were professional, FINRA registered investment banking experts who understood Reg FD. And I would say, you know, I don't want them talking to them either. Even my general counsel. So it's like, if you believe in this kind of delegated authority, then you also have to question, you know, where is the communication coming from and where is it authorized from? So that's a very complicated answer that, you know, I keep developing. So if I've lost people, I understand, because sometimes I get lost in this argument myself. But, you know, I think the actual client is the CFO, the CEO, the directors, audit committee chair. And investors have to trust that the auditor is being watched by the PCAOB. And that's another delegated authority. You know, that the investors can't know that the auditor is screwed up and testing. I mean, there's no way. So I don't know. I'll shut up now.
Amy?
Great. Thanks, Andy. Yeah, go ahead, Mary.
You know, I had never really thought about that in terms of who the client is. I mean, you're right. In some respects, it's the CFO and the company hiring the auditor, but maybe we misworded our question, because maybe the better question would have been, who's the beneficiary of the audit? Because in the end, it really is protecting investors. That's the purpose of the audit. So maybe the client is not the investor. Maybe the client, the investor is the beneficiary. I think we're using words to describe something here, but I believe that the client is the investor. I don't really support that argument. I think all of those people named, all those roles support the investor ultimately. And I do think the end beneficiary is the investor. So.
Thanks, Mary. Okay, I have Ken, Gary, and then Sandy.
I want to double up on a couple of points made, but beyond being a CFO for decades, including Yahoo and a whole bunch of companies, I've been on a number of boards over my career, including now. And clearly, Sarbanes-Oxley makes it very clear, if I could use that word again, that the audit committee is responsible for ultimately signing and appointing the auditors. You're right. I actually sort of agree. It's in thinking about words, certainly the beneficiary are your investors. When I would take investor calls and still talk to investors, I don't think a single one ever talks about the auditor. They assume that the company and the audit committee have made the right choice, and they assume the audit is good. And at least in my experience, and others that are coming from investors can talk about it if they disagree with me, but my whole experience has been they just defer to the audit committee to make the right decision. So it's really important that it is right. I think you get into nuances when you have complicated accounting, and there may be different kinds of accounting in some of these companies, where there you may have some pushback by the investors, or you have companies that are challenged, and therefore you may want to be looking at going concern issues. You may have a lot of intangibles, and there may be questions on the valuation of those. So there are corner cases where there are issues, or at least I wouldn't say issues, but more questions that do need to delve into, and then you do get into situations. But I think by and large, my experience, I can't remember any single investor call I've ever been on as CFO in which someone asked me about the audit, the actual statements themselves. They just assume they're correct.
Yeah. Thanks, Ken. Okay, next in line, I have Gary, then Sandy, then Nemit, then Gina.
Thank you, and appreciate being included today. I don't know that it relates exactly to this question, but I wanted to make sure that I put this out there at some point today. I think that and Sandy, I think you give institutional investors a little bit too much credit. I'm not sure that they are any better than the retail investor when it comes down to understanding the benefits of an audit. But I think there's an awareness issue that and I did answer that I thought that the investor was the client, but I do question that, because I don't think that the investor really appreciates or is aware of all that's going on. I had an experience this last month. We were fortunate enough to have the good folks from the investor relations team at Microsoft come in and come to our office, and we visited for a long time. And at the end of the meeting, I asked the investor relations manager about critical audit matters, which I thought were pretty standard. And he looked at me with this puzzled look, and he said, and didn't really understand what that was. In attendance to that meeting was also one of the sell side analysts that covers the company, and he wasn't very familiar with it. And as we walked through, I explained what was going on. He said that I was the first one that had talked to him about that, and he had had thousands of conversations over the last 4 years since he's been in that position at Microsoft. That's really a frightening development if we're trying to make sure that investors are aware of what's going on, because if other investors aren't asking about this, I worry that nobody is. So I do think that a lot needs to be done. It's great work, and I just think there's an awareness by investors that needs to take place.
Yeah, Gary, I think that's really a critical point. We've talked a lot about the expectations gap with investors. And so I think it's important to continue to underscore that. And I also wanted to point out the creation of the Office of the Investor Advocate at the PCAOB. Saba and her team work diligently to try to improve the communication on what's happening out there. And CAMs, or critical audit matters, are a really key part of that. And I think we're going to be talking about those later in the meeting. So lots of good stuff. But thanks for those comments, Gary. Sandy, you're up. But you're on mute.
I took my hand down. I can't do both things at the same time. So I think that as investors, we do believe in the delegation of authority. I don't think that wanting more information and being the client and not delegating are mutually exclusive. So if you delegate something, it's trust but verify, right? The issue is one of accountability in that agency relationship and having sufficient information to do that. I think at the outset we talked about the meeting with audit committee members last fall, and it reminded me, one person said, well, we get questions on compensation and discussion analysis, but we don't get questions on the audit. And I said, that's because there's no information from the audit, right? And that's routinely what we hear. The critical audit matters are not meaningful, so they don't get paid much attention to, which goes back to a recommendation that we made last year. And that there's really very little information, which is one of the other questions, for investors to actually execute their stewardship responsibilities. So why vote on and I know it's a ratification vote on the auditor if it doesn't matter, right? Why create that sort of false sense of action? I don't think I give a credibility to the institutional investors. I think institutional investors will use information when it's useful, but it's probably not useful, so that's why they don't ask about it, right? And they also know that they're not going to get any answers because of Reg FD. So I just wanted to add that to as context for some of the comments that particularly Sandy made about the other Sandy, the rich Sandy, that it doesn't believe that we don't believe it's delegated. It's just that we want to make sure that we can supervise that delegation.
Great, thanks, Sandy. Mehmet?
Thanks, Amy. So the way I see things is I mean, I strongly believe that the investor is the primary client of the auditor. And the reason why I stand by this view is I mean, the purpose of an audit is to ensure that financial statements comply with GAAP. And investors are the primary beneficiaries of, or primary users of audited financial statements. So even though the audit committee is in charge of hiring the auditor, the work that the auditor does is for the investor, so that way they can trust what's reported in financial statements. And I mean, if investors, if people are not asking questions about the audit during a conference call or during other meetings, I don't think that means that the audit is not important. When things work, when the audit is working, when we're not concerned about whether financial statements have material misstatements or whether they're fraudulent, then we don't ask questions about things that work. Just like how if when I step on a plane, I'm not asking about what is the pilot's qualifications and and how safe is the plane. I mean, I assume that it works, but that does not mean I don't care about the safety standards of aviation, right? I care about it very much, and if I was concerned that things were not working, then that would be the number one factor in my decision to fly or not. So, I mean, the fact that we've not seen major like extreme like Enron type frauds since Sarbanes-Oxley and since the PCAOB is doing its work, I think is testament to the oversight that exists now. But in instances where there have been failures, particularly in the private market side, then there are questions about what happened to the auditors, where were the financial statements. I wouldn't take the lack of questions or the absence of questions about the audit to mean that investors should not be concerned or are not concerned about the audits as such.
Great. Thank you, Nemit. Next we have Gina and then Steve Lipner. Sorry.
So
Go
I'll
ahead,
be
Gina.
brief. I know we're bumping up against our time. Thank you, Amy. So a lot of comments have been made, and I want to go back to the comment that Sandy Rich made, which is that I thought very hard about my answer to this, and I agree with Sandy that the client of the auditor, in the sense of who contracts and who holds them accountable, is the audit committee, and that what we have is sort of a classic principal agent problem, where the principal is the investor and the agent is the audit committee that they vote for, and the kind of point of execution is the CFO. And I think that, and principal agent problems arise when you have the potential for a misalignment of interest, any kind of conflict of interest, the desire to present a set of financials that may not be correct is a conflict of interest, and one that also would be very, very difficult for the principal, who are the investors, to know whether or not they're getting the final truthful result. And so I do think that sort of even more underscores the need and the necessity for the PCAOB. And that is why we need that trust but verify. And of course, I think what Sandy Peters was saying is equally important, which is that how we figure out how to make information more transparent so that the right questions can be asked. That is the challenge that this group exists to help understand. And obviously there is Reg FD, and there are limitations on what can be included in public transparency. But that doesn't mean that we don't make an effort. And more importantly, I think that that principal agent problem is precisely why Enron happened and why WorldCom happened, why this organization was created, and why it is extremely important to continue to have a facilitated trust but verify process.
Thank you, Gina. Steve Lipner and then Steve Gray.
Thank you, Amy, and you did pronounce my name correctly. So, thinking about this one, I ultimately went with the audit committee myself. Now, I think the reality is it will be the CFO with his or her team that bears the internal responsibility. Gina, I like how you refer to the CFO as the executors. I think that's right. They are the sort of internal clients bearing the responsibilities for the audit and the books and records. However, at the end of the day, it is the audit committee that is tasked with approving and hiring that auditor. And there is a level of independence that non-executive directors bring to the process, which is very healthy here. So I would lean towards the audit committee.
Great. Thank you, Steve. Steve Gray?
Hi, can you hear me okay?
Yes, thank you.
Okay, I'm just asking because I'm actually heading down Highway 95 as we speak, so that's why I don't have the video on. I agree with very much of what was said, and Nemit's comments in particular, as far as not wondering about the pilot, flying the plane and their training. I mean, the analogy that I would make, and this is something that I would bring up as, the whole existence of the organization is being contemplated or debated. I mean, the PCAOB is to the investment community what the FDA is to anybody who would consume a pharmaceutical. And I don't need to see the inside of the audit process to be able to trust it. I understand that I don't have that transparency, and I shouldn't have that transparency, because then it can make me privy to inside information as an investor. But my reliance on it is absolute. And so that's a critical linchpin. A lot of the comments have been talking about what it's really, it speaks to the fundamental corporate form from a legal standpoint and the separation of ownership and control. The auditor may be hired by the company, they may be the client of the company, they may be overseen by the audit committee. But if I'm the owner of the company as a stockholder, they work for me. I am the beneficiary. And that's that ownership and control separation. But if I am the owner and the marketplace wants me to act like an owner and to police these companies as I should be, to make the market more efficient, to make sure that the equity is adequately priced for the risk, then they should want me to have whatever I need to exercise that role, that responsibility to fill, shouldn't they?
Great. Thanks, Steve. Anybody else want to comment on this interesting topic? If not, or if so, go ahead and speak up, because I might be missing your hand. Okay, let's move on a little bit. Let's move towards more audit committee and auditor expectations. So I have a number of questions I wanted to highlight here. I'm guessing it's all going to run together. So I'm sorry if I seem to be overlapping, but that some of these topics really are not, they are just generally overlapping. But some committee members, not all, felt that investors should have greater access to the auditor. And I think somebody mentioned this earlier, potentially more communication and even maybe presenting at shareholder meetings. Does anyone want to discuss here what they were thinking as it relates to agreeing with that comment and what they would like to see in terms of engagement with the auditor by investors? Oh, wait, someone's hand there. James, go ahead.
Thank you, Amy. When I got to that question, I looked at it, engagement is not actually the auditors talking directly to investors, or even the audit committee talking directly to investors, but more so the audit committee communicating better with investors. And in 2015, the SEC had a concept release in which investors were able to discuss this particular dynamic. Also around that time, the UK had some really good audit reports and some really good examples of what good communication from the audit committee might look like to investors. In terms of engagement and giving investors more information, I think that becomes a great avenue in which the audit committee can share with investors and tell them, what did you do the past year? What did you focus on? What can you tell us that would help us understand the company better? And because it's actually in the annual reports, there's not this fear that you're giving information or advantage to some investors and not to others. But it gives investors a better understanding, what work the audit committee happens to be doing. And I think that form of communication at a minimum is what I'm thinking about, that would be beneficial to investors.
Great, thanks, James. Another person I think who might have an opinion on this would be Sandy Rich. Sandy, are you willing to share what you think about auditors engaging more with investors, or even audit committee communication to investors on what they were focused on for the last year?
Sure. So I've got two thoughts about that. The first one is all about Reg FD and who has responsibility to speak for the company. Um, you know, I'm sure auditors have a vague understanding of what Reg FD is, and I'm sure some of them listen to company conference calls, but mostly I suspect they don't. They never did with my companies. So, you know, I think there's a tremendous difference in terms of the view an auditor might have to an investor call and the CEO or CFO. So I would argue that if one of my directors, one of my audit committee members, my auditor was talking to investors, I would likely fire them because I don't want them talking to my investors because they are not, you know, unless, like I said, unless they're a FINRA registered investment banker that understands the limits and knows exactly what the CEO and CFO have said publicly, I think that's too great a risk. And you know, I would defer to a general counsel to confirm my view, but I worry about that. The other thing is, you know, it's about delegated authority. At some point, I put myself in the position of, so I was an investment banker before you know, for my current position. I would find it very difficult if even a professional analyst, a professional CFA analyst responsible for direct coverage of companies could keep up with the volume of data that would be required to know in detail everything the auditor confirmed. They're going to have enough pressure on them if they cover 5 companies and they're large corporations in Fortune 500. These companies are publishing thousands of pages of data regularly. They have to delegate. They have no alternative but to rely on the way Gina explained it far better than I did. And I'm not going to use her words, but I think she got it right on point. And then take one more step back. And what is the structure of how people have their money invested, right? So for Amy and me, we represent our members, right? And we have investment authority over billions of dollars that our investors as members have no insight into. And I can't speak for Amy's board of trustees. My board of trustees are all pedestrians. They wouldn't understand any of this. 51% of regular investors, day-to-day investors who have Schwab accounts, invest through ETFs. So they're delegating an agent, they're delegating to an agent before that. I mean, 2 or 3 layers before the companies, right? So I think that the structure of our markets compel us to rely on agents and in multiple layers. And I don't think you can avoid that because the ability of an investor to, 1, understand, 2, digest the volume of data compels them to trust people like the PCAOB to confirm that the audit was effectively executed, that the audit committee hired the right auditor, and that the financials are fairly represented. And I don't know that there was a choice otherwise, because how would we layer in the costs of actually doing all that?
Yeah.
So yeah, I don't know if that directly answers the question or muddies the water, Amy, but
No, I think it's really helpful, Sandy. I think that different perspectives are one of the things I really value about this group. And not that it's that different. I think that your focus on value add and cost is really interesting and critical for us to understand as well. Nemit, do you have a comment on this topic?
Yeah, I mean, I just want to say that, yes, I think having every investor have access to the auditor, I don't think is necessarily something that's feasible, but having the auditor report additional metrics, I think, I mean, Sandy Peters said this earlier, and we've hit upon this point in several prior IAG meetings. So asking the auditors to disclose more information about what work was actually done, so audit committees and investors can evaluate what the auditor did, I think is a very reasonable request. Currently, we don't know anything. Yes, of course, the auditors go through. There's a ton of work papers that they have to support their audit opinions, and it's not asking for disclosure of everything, right? But right now we have very, very little to go by to evaluate the auditor, even in hindsight. Like if we were to look back, if there was a financial statement issue that popped up, I don't think we have enough information to even evaluate whether the auditor did their job or not. So, I mean, some of it is this is the job of delegating the role, the oversight role to the PCAOB and to the audit committee. But I think asking for a little bit more information about what the auditor does is I think is important.
Yeah, thanks, Nimit. And I think it does underscore again the critical audit matters discussion. I just think that is such an important advent over the last several years. And I know we're going to talk about it, but it's one avenue where we can actually hear from the auditor what they focused on in terms of risk areas. So I think that was a really important evolution of reporting. But Gina, I'll hand it over to you.
Actually, you just said what I was going to say.
Oh, I'm sorry.
Good
Gosh,
job.
I'm sorry.
Yeah, I'll just underscore that I agree. I would never want my auditor to, have a direct conversation with investors. But I do think that the role of the PCAOB is to standardize what information becomes available, and critical audit matters were, I think, an important mechanism for doing that and continuing to explore what that information looks like and what it should be and what it can be. That is really what kind of we're here to explore.
Great. Thanks, Gina. Sorry, I stole your point there. Anybody else on this particular one? If not, let me just move ahead. This one I know we've talked about before as well, but we've talked a little bit about the desire for transparency into financial statements of the audit firms themselves, presumably to identify potential conflicts of interest or new focus areas for the firms. But again, this was highlighted in the survey as something that in general people agreed with. Does anybody have any thoughts that they'd like to contribute to this particular topic? I plan on next going into identification, disclosure of audit hours by partner manager staff and specialists, as well as allocations by risk area. So a little bit separate. The first one just being financial statement disclosures of the audit firms themselves. Steve Lipner, I think you have your hand up. No.
No, I was going to make a point on the previous one, but it passed. It's fine.
Oh, I'm sorry, Steve.
No worries.
Yeah, I can weigh in.
Thanks, Nimit.
But I think there's value to seeing the financial statements of the audit firms themselves, and this would not be unique in the sense that I think such information is available for audit firms in other countries. If you think of the UK, the public can access information about the audit firm financial statements. I would say that the motivation for this is in some sense is to understand what the pressure points are, right? To see how exactly they function, whether what agency considerations might exist within their firm. So there is value, I think, in seeing their financial statements. Directly, I think where such information might help is understanding how much of the competition for audit firms comes through prices, because we do worry about whether competition in the audit market would result in decreases in prices to the point where there's not enough emphasis on quality and ensuring financial statements comply with GAAP, but rather just competing for the lowest audit fees. So I see value to this to these disclosures.
Thanks, Nimit. Anybody else thoughts on this financial statement disclosure of audit firms?
Yes, Amy.
Sandy's hand.
So I'm a little psychotic about this, Amy. So up until I would say this time last year, I would have argued that information is of value only to the PCAOB and their expertise. But then I became a director of a company, got caught up in an auditor who was effectively put out of business by the PCAOB and the SEC. And it is now a question that I ask every auditor before we hire them. So I would say there is a really good indicator in terms of the hours of the lead auditor and capacity of that auditor to carry the amount of work that they are handling. I am, that brings up another subject of, when the PCAOB publishes reports about an auditor that is clearly about to fail and get slammed by the SEC, it takes a little bit too long to execute on that. I'm dumbfounded by people who don't. Here's a pitch for the PCAOB reports. I am dumbfounded by the fact that there were, I think, 36 different audit committees that were surprised when the SEC put a specific auditor out of business and trashed almost 2 fiscal years of audited financials for SEC reporting purposes that had to be re-audited. It was, and we were lucky. Because we read the PCAOB reports, we fired the guy and outside of the SEC's execution date. Thank you, George. And everyone at the PCAOB. I asked that question because if you got one auditor signing off on 36 companies quarterly, you've got a problem.
Thank you for that real world example, Sandy. I have Jeff and then Ken and then Sandy Peters.
Thank you, Amy. I think it's important to point out that the Treasury study of the auditing profession, that the co-chairs of that study, which was the Arthur Levitt Jr., the former longest serving chair of the Securities Exchange Commission, and the former chief accountant, Don Nicolaisen, they wrote a co-chair statement at the beginning of that report, which recommended requiring that at least the largest accounting firms make audited financial statements available to the investing public. And in support of that recommendation, Chair Levitt and Chief Accountant Nicolaisen said that the, quote, the largest auditing firms play a vital role in ensuring the integrity of our capital markets, and fairness requires that if a handful of these firms dominate the public company audit market, they should be transparent and provide a level of financial reporting that is generally comparable to that of the public companies they audit. Thanks.
Thank you, Jeff. Ken?
Yeah, that's a good lead-in for me, Jeff. I was on that subcommittee. I thought it was fabulous. Unfortunately, we got stuck in the 08-09 financial crisis, and so a lot of the work got put on a bunch of shelves, but it was really well done. One of the things we did ask for, as was just mentioned, was just that, financial statements. I believe they should be provided. I don't know why companies provide them, that in the major accounting firms cannot provide it. We also asked for the signature on the audit report to be by the engagement partner. Now that we put that in the AP report, which, by the way, hardly anyone looks at, which I think needs to get changed and actually more comprehensive. I would suggest probably most people in this call don't even know what the AP report is, other than a news organization. So I think, I would say the thing that also amazes me is how many small firms, I see the enforcement actions, how many small firms, have very few partners. In many cases that you folks find out don't do quality audits. You provide enforcement actions against the partners in the firms. In my opinion, many of these should not be in business, and probably wouldn't be in business if we saw the financial statements thereon. So I am I think if anything, the PCOB needs more capability to enforce some of the things they're trying to do than some of the pushback that they get on some of the things I think make a lot of sense. Because I remember the pushback we got when I was on the Treasury Subcommittee, and we pushed forward because of the strong leadership that committee had. So I'll stop there.
Great. Thanks, Ken. Sandy Peters. Sorry, you're still on mute, Sandy.
I'm working on my skills. My response was or my comment is in response to something that Sandy said with respect to not knowing that a certain auditor had this many responsibilities, which is evident from Form AP that is the case. In fact, we did that by partner name when it came to the SPACs. I think that what was really interesting, if you compare the Center for Audit Quality survey of audit committee members and of investors, you will find that investors know more about, and I know that Sandy may disagree with this, but that survey basically says investors look at Form 8P, audit committee members do not, right? And they should, right? Because it's not just about knowing who the partner is, it's knowing what all else is on the partner's plate, right? And so I think it's a really good illustration of how delegation of authority can go awry and how transparency can enhance, when investors know it, their accountability for that. We published things on Markham and Witham and showed that the partner names there's no way you could do this many audits, right? And I think, I wanted to also say something with respect to Jeff's point. I think that, if you look back at some of the surveys that were done, some of these same surveys by the audit profession, you find that most audit committees are picking the firms based on their reputation, not based on facts. And they're based on reputation and assumptions. Most people don't know, and certainly most investors don't know, that audit committee members don't get financial statements for the firms. The PCOB doesn't get financial statements for the firms, right? There's an information bottleneck along the way that impedes this delegation of authority. And so the real thing that investors are asking for is not only for themselves, but for asking for things that will facilitate. One of the questions in the survey was, do audit committees need all of this information like investors do? And I think the answer was pretty much yes, right? So what investors are seeking to do is to provide an information flow within the ecosystem and delegation of authority to provide those within the ecosystem the information they need to make good decisions on the behalf of investors. And I think that the point that Sandy made is an illustration of why Form AP is a good example of doing that.
Thanks, Sandy. Gina?
Oh, sorry, wrong hand.
I will so I will go back to my principal agent issue. I think Charlie Munger is attributed with the quote, "Show me the incentive and I'll show you the outcome." And I think the challenge that we have, and Sandy Peters just kind of underscored this, ultimately the problem is a question of business model, right? And to some degree, how audit firms make money. And one of the ways that they make money, and they're incentivized to do so because it's a partnership structure, they are incentivized to pile as many audits as possible on top of an auditor in order to make as much money as possible. That is the incentive that the agent that we've delegated, that investors have delegated to, that is their incentive ultimately. And so to some degree, the reason that the PCAOB exists is to moderate that. Because at some point, the protection of the investor is ultimately the desire, not the sort of fulfillment of partner wealth. And that's what is at question here and why the Form AP even exists. Sandy's point that it is shocking that audit committee members do not look at that. I think that the fact that that information has now been made, those data sets are now more available, that transparency. And by the way, I feel like my work on this committee is done with those data sets. I'm so happy. But I do think that that is a valuable piece of information because it gives insight into audit quality, and it gives insight into the questions you need to be asking. And just, remember that ultimately, I think that's the push and pull that we're dealing with here. I don't actually believe that this is that this is necessarily a sort of malicious desire to be to put up poor audits. I think it is the incentive to build a business model that has a very, very low margin. I think technology can change that and can actually improve this going forward, but it will have other impacts as well.
Yeah, that's great. Thanks, Gina. But I would be remiss to say your work on this committee is definitely not done. So despite the huge win with the PCAOB releasing that data electronically, which is awesome, we're super grateful. You are much more contributing than just that. So thanks for those comments. I think that technology comment is really important. And one of the points we highlighted in the survey, which there was general agreement with, is disclosure of audit hours by partner, manager, staff, and specialists, as well as allocation by risk area. I think an important component to that could be technology as well. And I think there's going to be, maybe more market fragmentation or market consolidation based on technology spend. So a lot remains to be seen there, and maybe we'll touch a little bit on it later in our discussion of auditor availability later in the meeting. But I think those are important points that as investors, it's interesting to see those data points in terms of, what the focus areas are and who's spending the most time on the audit. I think it does go to quality and ability to rely on the financial statements. So just interesting points. Okay, so we have about a half hour left in this particular discussion, and I think we'll pivot to the third point, which is essentially investor expectations for the PCAOB and regulators. And so there's a lot of highlights that I wanted to call out here. But generally speaking, let's just kick it off with some committee members felt that the PCAOB should not just focus on audit quality, but also on investor protection. In addition to the SEC focusing on investor protection and capital formation, the PCAOB also focusing on that. Does anyone have any specific thoughts around that particular nuance?
Well, I'll start by saying, so I read that question and I wasn't entirely certain how we weren't already in the investor protection business. So I guess I would love to hear a little more behind the sort of insight behind the question.
Great. No, that's why we're here to talk about it. So Sandy Peters, I see your hand up. Do you want to contribute to that? No. Yes. You're on mute.
I can give you a little background on that. I think that, the PCAOB's mission is investor protection, and it doesn't mention audit quality, right? And much of the objection to many of the recent proposals has been they don't enhance audit quality. But there is no definition of audit quality, and there's no definition of the linkage that's needed, how many degrees of separation between doing the work and it improving audit quality is necessary. So a good example of that is in some of the firm reporting requirements. There's a belief that the PCAOB and investors don't need audited financial statements of the firm because it's not linked to audit quality. But as as like when you buy insurance, right? You care about the financial wherewithal of the firm, not just what the particulars of the policy say, right? They're both important. And so what we're trying to discern is if there is a good understanding of the mandate of investor protection and whether in fact there needs to be a definition of audit quality and how close something has to be to improving that definition for it to be in fact incorporated into an analysis of the standard, because it's always used as an objection to something, but never specifically as the definition of what audit quality is and how it's not linked. So that's the reason for the question, and I think there's one or two that were around that.
James, go ahead.
When looking at that question, I kind of looked at the system, because basically you have the existing shareholders, those who currently own the company and are, reviewing the financials and checking on the audit, and you have investors who are looking to buy in, and basically the information they have to receive has to be transparent and fair, so you're not lying to investors, telling them the company is better than it should be, so that the current investors can in fact sell. So I think in those lights, in terms of the system, you're talking to both buyers and sellers at the same time. It's important that the emphasis is in fact on audit quality, so you're providing a fair assessment of the company. There could in fact be the case in which it's not fair, where you advantage the existing shareholders in a way that would make it at certain times easier to sell when the company isn't doing what they say that they are in fact doing. So I think it's highly important that the communication is transparent, which goes directly to audit quality, which I think there should in fact be a definition given this complex system that's being served.
Thanks, James. Any other thoughts on this topic? Sounds like there's some belief that the Venn diagram isn't 100% overlapping, but there are a lot of overlaps. But I see your point, James, in terms of investors not always having the same protected needs, I suppose. Another area that we really wanted to highlight, or at least I wanted to highlight, that some committee members, not all, felt that we could benefit from disclosure of emerging technologies in the audit, really to understand how it might be changing, potentially identify opportunities for improvement in the standards, et cetera. Does anyone have any thoughts they'd like to put out and discuss further on this topic? I see Satyam.
I'm sorry, I actually had a comment on the last question, but it's okay, I can come back to it.
You can go ahead if you'd like, no problem.
Well, I was just saying that, I was going to say that, I think the Venn diagram, certainly it's not 100%, but as a new person coming to this committee, I'd always assumed, I think, that investor protection was core to the mission of the agency. I think it's worth a broader discussion if the PCAOB could be more proactive in communicating, transparency around inspection findings, proactive communication with the investing public more generally. I know there had been some comments earlier that investors don't comment as much as we would like in PCAOB rules and the like, but I certainly think it's infused in every part of the mission, and it's something that we should be thinking about as part of everything we do. I think we can expand it, but it's infused in everything, and it should be.
Great, thanks for those comments. I think it leads me into another area that we wanted to discuss further is increased transparency by the PCAOB of the nature and severity of inspection findings, including this one is not universally agreed upon, names of companies being inspected. So this is a big topic that we've discussed over numerous meetings, but I thought it might be important to illuminate a little further if people have comments they'd be willing to share on transparency of inspection findings and names of companies being inspected. Nemit, go ahead. I'm sorry.
Thanks, Amy. I was going to say, so I've thought a lot about this, about whether the PCAOB should disclose the names of clients, and I've heard multiple arguments from for and against it, and to me, I feel like it, in some sense, it boils down a little bit to what we see as the oversight role of the PCAOB, or what do we think is the mechanism of PCAOB oversight that actually influences auditors to, say, do a better job auditing financial statements and to protect investor interests. On one hand, it's possible that, at least my view of the world is that what the PCAOB does, it serves a big deterrence effect. It has a big deterrence effect in the sense that by providing Part 1 findings and saying that Part 2 findings would be publicly released if the auditor does not address the PCAOB's concerns, it gives auditors incentives to address the issues that the PCAOB identifies during their inspection program. And to the extent we see deterrence as a mechanism through which the PCAOB achieves its goal of investor protection, then I don't see a central role for disclosure of client names. But on the other hand, the thing is, if what we believe the purpose of the PCAOB is to inform investors about what auditors do and about what they find as part of their inspection process, then there's more of an argument. Now, I think the deterrence role is extremely important, and by disclosing the client names, I worry that it can affect the deterrence effect that the PCAOB has, and encouraging auditors on an ex ante basis to improve audit quality and to focus on investor protection. I'll stop.
Thanks, Nemit. Ken, did you have something you'd like to add?
Yeah, no, I actually would like to see the disclosure of the companies, unless there's some reason that they think there should be confidentiality in which they could ask for confidentiality. I think you should also do, sort of encourage people to read the inspection reports. You send them out. I see them on email. I actually read many of them, and they're very telling as to what you find, both in inspection reports, as also the enforcement reports. So I think there's a lot of material there, and I think people that may underestimate, if you will, how much information that is provided by the PCAOB, both in terms of the inspection reports and your findings, particularly now that they're coming out more quickly, if you will, to the audit itself. It used to be a couple of years. Now I think it's more like a year delay, and you do need that amount of time. So now that they're more current, I also think, and I said this as well, it would be good to have a list of findings that you can provide to everyone. So you can say, here's lessons learned, and here's things that, that not only the accounting firms can learn from the inspection reports, but here's what audit committees can learn from them. Here's what companies can learn from them, so that we can be looking. I'm sort of searching for that to see how I can be better as an audit committee member from what you're finding. But I would suggest maybe even hold a round table and just say, from the inspection reports, here's what you're finding, and here's lessons learned, and here's things that we could all do better as given those reports.
Great, thanks, Ken. I think they have done some of that, but I'll ask Saba to touch on that if she could later, if that is a possibility. But next, I think Gina, then Satyam, then Sandy Rich. Gina, we can't hear you.
Sorry, I got my hand down, but somehow didn't get myself unmuted. When I read this question, I had a sense of where it was coming from in terms of providing deterrence, but I do think that it's one thing to sort of put in, as the deterrence mechanism, some sort of nominal fine, which I think many would suggest doesn't do the job. But it's another to potentially impact a company's brand value through public exposure. And I do think that if you look at the value of, the S&P 500, the companies in the S&P 500, I would argue that 80 to 90% of that value is brand value. It's not in inventories, it's not in manufacturing centers. I think that there's a lot of brand value out there. And so I do think that it is a mechanism that should be wielded carefully in that regard. So that was the first thing that I thought of, was I think it is important to provide the right incentives. Like I said, show me the incentives, I'll show you the outcome. But I do think that you want to make sure that you don't point a cannon at it either.
Great. Thanks, Gina. Satyam, you're next. And then Sandy Rich, and then Jeff.
I actually have a question more for Nemit, because I thought where you were going to take your argument was that the deterrent effect would be increased by disclosing the names in the inspection reports, but you thought it was going to be decreased. And I understand, of course, there's always a balancing act with these kinds of policy questions, but you actually went a different way than I expected you to go with that sentence. I'm curious if you have any thoughts to help us understand that.
Amy, can I weigh in?
Yes, please go for it, Nemit. Thank you.
So I think Gina hit upon this. The thing is if the punishment is as severe as is disclosing the company's name whose audit had an issue identified by the PCAOB, the reputational harm to the company for potentially no fault of their own can be pretty significant. So if the auditors are told that the inspection findings would be publicly disclosed at the say even the partner level or the firm level, and there are additional findings that would be disclosed if you do not take corrective action, that provides the incentive to take corrective action. And from everything we've seen in the data, from at least what academic research tells us, is there's pretty strong evidence that these disclosures, part 1 findings, part 2 findings, they've changed the way in which auditors conduct the way in which they do their work. So that's where I was coming from. That makes sense.
Great, thanks for that. Next is Sandy Rich.
So generally, I've been told by auditors when they have a PCAOB review of an audit from a company I'm on the audit committee of, they've generally disclosed that to me. And I would have to, I'm going to rely on Gina. I'm kind of concerned about, leveling the cannon because the PCAOB has influence, and I'm not confident that people will read the entire report. They might just say, oh, this company auditor was zinged by the PCAOB, where it might have been just a non-financial statement restatement requirement, just an administrative support failure for which the auditor was fined, but which didn't affect the company. I worry that investors, even professional analysts, wouldn't be able to see the distinctions there because of the volume of information.
Yeah, great. Thanks, Sandy. I have Jeff and then James.
So Amy, with your permission, I would like to briefly go back to the comment that Mary started with at the beginning of the session.
Certainly, go for it, Jeff. Thank you.
I believe it's very important that we reflect on the fact that we appear to be at a critical point in the history of U.S. of the U.S. auditing profession when the private sector body, the PCAOB, that was created to save the profession from its own failings is now at risk of being eliminated with the implicit support of the profession it saved. I strongly oppose the legislative proposal that's expected to be considered tomorrow in the House Committee on Financial Services that would, effectively end the objective reviews of audits and likely return us to the equivalent of the failed peer review process that existed at the time of Enron and WorldCom. While the Public Company Accounting Oversight Board as an organization has been imperfect, I believe that it has been a primary catalyst for major improvements in audit quality since its formation. In that regard, I especially commend the 400 plus dedicated PCAOB staff in the firm inspections group for their difficult work in conducting domestic and international inspections, including the more than 30 plus PCAOB staff that have been executing inspections in mainland China or Hong Kong. I do not believe that these and other PCAOB functions can be effectively transferred and performed if they become the responsibilities of the Securities and Exchange Commission as contemplated in the legislative provision. I strongly agree with SEC Chair Paul Atkins' recent Senate testimony, in which he stated that, quote, accounting and auditing is really crucial, obviously, to the investor protection and to the capital market. I believe that audit quality and oversight are sufficiently important to investors and the capital markets that they should be the responsibility of an independent, adequately funded private sector body focused exclusively on those issues. I urge all investors and all market participants to publicly oppose the legislative provision that is scheduled to be considered tomorrow by the House Committee on Financial Services. Thanks, Amy, for affording me the time to express my personal views on this timely issue.
Thank you, Jeff. I really do appreciate your views and your expression of them. I have James, Ken, and Sandy Peters.
Yes, thank you very much, Jeff. My comment was a simple one. And if you are a current shareholder, you may not want the information to be publicly disclosed. If you are an investor, you might want that. And so I think there goes the problem in one additional issue between current holders and potential investors.
Thanks, James. Ken?
I was going to double, triple down. Jeff said it way more eloquently than I could, but I agree 100%. I think we need focused oversight, not subsumed in the SEC, what the PCAOB is doing. So I think as an independent finance organization, it's great to do it, and I worry that it would lose its focus. It would get caught in budget, then you get caught in how much budget can you afford for this versus other things the SEC is doing. Now you have a very focused budget that's financed by companies. So it clearly is independent and can do its work. If it's part of the SEC, I worry about it losing that emphasis and losing that focus, and frankly, maybe even get cut out because of budgeting requirements. So I would be happy to testify because there's no question that the oversight the PCAOB has done for its, 20 years, I don't know exactly how many years, has been very well, it's been needed. The discussion we had earlier has shown that. And so I am clearly almost violently disagreement with even thinking about this resolution. I don't even know how it even came about. It's one of those things where it's trying to solve a problem that doesn't exist. And I don't even think the auditors would even be in favor of moving it back into, or even moving it, not necessarily back, but moving it into the SEC and losing its entire focus that it has now.
Thanks, Ken. I have Sandy Peters and then Gina, Satyam and then Gina.
I too would like to say something. I agree with all of Jeff's and Ken's points, and I'd like to emphasize My support for the PCOB staff at what I'm certain is a stressful and unsettling moment. If the proposed House Financial Services markup, which Jeff mentioned, passes, the PCAOB, but not the FASB's accounting support fee put in place under Sarbanes-Oxley Act of 2002 will be repealed, and the activities and responsibilities of the PCAOB, in theory, will be transferred to the SEC. It's important to remember that while the accounting support fee is remitted by public companies to the PCAOB and FASB, the accounting support fee is ultimately paid by investors through the reduction of the residual profits of the public companies they own. The House Financial Services markup memo indicates they are making this revision in the name of deficit reduction. It seems only in the government it seems only in government math is reducing revenue, such as the accounting support fee, and in theory, retaining the responsibilities and expenses under the SOX Act, even if they are reduced, is considered deficit reducing action. According to SOX Section 109C1, the accounting support fees are not considered public monies of the United States. In fact, these monies are not collected by the Treasury. Though the PCAOB revenues and expenses are not collected by the Treasury, they are presented gross and net in the budget. Their net effect to the deficit is nil. Reduction of the accounting support fee has the effect, at the very maximum, of increasing U.S. corporate tax revenue by 21% of the accounting support fee because the fee is deducted in arriving at corporate taxable income. Such amount would be insufficient in funding the expenses the SEC would need to incur in executing the PCAOB's responsibilities under the Act. Transferring the PCAOB's oversight responsibilities to the SEC will not only increase the headcount of the U.S. government, which is counter to the stated objective of this administration, it would also increase the deficit, unless, of course, there really isn't a transfer and execution in substance of those PCAOB's responsibilities. There is no mention in the proposed bill of additional appropriation or funding of the SEC to cover these costs, and at a minimum, the SEC would need to increase its transaction fees to cover that increase in the deficit. As such, one can only question whether the SEC will actually undertake or have the ability to undertake these responsibilities for the PCAOB. The only real conclusion one can draw, one lobbied for by the audit firms, the audit profession, and their lobbying organization, is a desire to eliminate the regulation of the auditing profession and to return to the pre-Enron era. As one of my colleagues quipped over the weekend when the news broke, Congress is defunding the police, the audit police, that is. We know how that turns out. In March 2005, at a meeting regarding the PCAOB and FASB's budgets, then SEC Commissioner and now SEC Chair Atkins said the following: "We all know that the Sarbanes-Oxley Act created the PCAOB because of deep failings in the U.S. accounting profession's ability to regulate itself. During and prior to the Enron era, the accounting profession fell down on the job and got what it deserved in the act." This is his words, not mine. Yet here we are, returning to that era, as Jeff points out. Despite the profession's recent complaints about the revisions to the auditing standards such as NOCLAR and audit quality metrics, which their own surveys show investors support, inspection findings which remain for several firms at stubbornly high levels, and complaints about enforcement actions, which on average have been approximately 4.6 million per year since the PCAOB's formation, and where the largest enforcement actions of the late have come from egregious behavior of some firms and members of the profession. The PCAOB has been good for the audit profession, of which I was a member and I'm still a CPA, and investors, increasing audit fees to more realistic levels, improving audit standards globally, providing audit partners with the backbone to ask for more support and to challenge assumptions of the companies they audit, who they refer to as their clients, despite investors being the real client. In recent years, members of the auditing profession have used trust and audit quality as marketing slogans. But trust isn't a marketing slogan. It is something that is earned and discerned by the behaviors, not the language of the profession. Earning trust is about doing what's right, even when it's hard. The profession's relative silence over the last few days while the PCAOB is put on the chopping block has been nearly deafening, with only the lobbying arm of the AICPA, the Center for Audit Quality, stating, "Oversight models may evolve, but what should not change is the profession's accountability to the capital markets and the need for a system that supports supports maintaining high standards of audit quality. A profession touting trust and audit quality cannot realistically believe their clients, investors, believe this is a sufficient response when the system for supporting and maintaining high standards of audit quality is being dismantled. Eliminating the oversight of the audit profession at this moment only reduces trust in capital markets, increases the equity risk premium, and reduces capital formation, a stated objective of this administration. The U.S. capital markets are the envy of the world, and recent events have, more than ever, resulted in the eyes of the world focused on such markets. We encourage the audit firms to speak out against this provision in the reconciliation bill if they want to truly demonstrate that they have their clients and the public's interest in mind, and if they want to build trust rather than use it as a marketing slogan. As our own survey of the IAG members, which we talked about, shows, there is not unanimous belief that the audit is of high value. This is a signal to the profession that the profession is losing, their product is losing value. If this provision is passed, when the first significant audit failure comes, and they will come, investors will point to this moment where the profession did not speak up. And not only will trust be eroded, so too will the value of the audit. I think we can all agree that we don't want to return to a world where the profession falls down on the job, to quote Chair Atkins. Investors support and are willing to pay for an independent, apolitical, well-funded audit regulator to ensure trust by investors in the market. We think the profession should as well. Thank you, Amy, for indulging me.
Thanks, Sandy. We have about 1 minute, and we have Satyam and Gina. So if you could
being
keep it brief.
mindful of time, I wanted to echo the sentiment that's being expressed so eloquently here today, and just remind everyone who's listening that the Congress intended in 2003 to put this expertise in a different agency, and they also intended to create a different private sector entity that's independent from the SEC. And I think as this debate will swirl over the coming days, we should remember that there was a reason, a distinct reason why Congress chose not to have the PCAOB at the SEC, but to create it in a standalone entity. And I think those reasons are as live today as they were 22 years ago.
Great. Thank you very much. No pressure. Gina, you're the last speaker.
Thank you. And I do not have a prepared remark. I will just simply echo Sandy Peters' comment that this does not actually reduce the budget deficit, and nor does it help investor protection or the potential for capital formation. It literally does not. It is a lose-lose. And that is not really, if you are going to make sacrifices, there should be a win somewhere, and there is literally no win here, not for the profession, not for the investors, and not even for the government and for the taxpayers. Nobody wins. I think that's important. Ultimately, what we want is for the average American to be able to safely invest their money and know that the investments they make are based on valid facts.
Great. Thank you very much. I really appreciate everyone's participation in this important panel. I know it was a wide-ranging discussion around the world of investor expectations, and I really appreciate everyone's engagement. And I'll turn it back over to Saba to keep us on schedule.
I'd like to make one quick comment, and that is that we've had a unified voice here in opposition to this proposal. I want to make sure our voice is heard. So it's a question more than an answer. I don't have the answer, but I'm hoping the right people have been listening today, because we really feel it's valuable. It'd be tragic to see the PCAOB merged into the SEC and lose its independence.
Thank you, Amy. Thank you, Mary, and thank you, Sandy. And thank you, everyone, for the robust discussion. Next topic on the agenda is IAG's presentation to the board on artificial intelligence, opportunities and challenges. IAG member James Andrus will moderate the panel, which includes Richard Jackson, who serves as Ernst Young Global AI Assurance Leader, Will Bible, Digital Transformation and Innovation Leader, Jen Kossar, US AI Assurance Leader, Gina Santos, IAG member. Detailed bios of the panelists are attached with the agenda. James, please take it away.
Thank you very much, Saba, for setting this up. Artificial intelligence, opportunities and challenges. It is interesting that many of the financial market players have had similar discussions on AI because of the importance of AI. I remember well in November of 2022 when ChatGPT was released to a whole lot of fanfare, and I tried it out. Initially, I was amazed, but I asked my ChatGPT a particular question, and that was, which basketball player has had the most misses in a career? The answer came back, Kareem Abdul-Jabbar, an answer that I knew was wrong, so I questioned ChatGPT. Interestingly enough, within about 6 months, that had actually been corrected and improved upon. But not surprisingly, there have been vast improvements since November of 2022. Because of those vast improvements in the introduction wide public of this thing we call AI, investors have been asking companies some very pointed questions in terms of how do you use AI? You know, how will it impact your business? How will it impact your human capital? What do you think the prospects happen to be? So in this discussion, we're going to bring it to the financial reporting. And we're fortunate to have 4 experts in the area of, not only financial reporting, but AI with backgrounds in the capability of talking about these particular topics. And so our discussion will focus on 3 things. First, a look at the current market. Next, future prospects. And finally, some broader themes. And after I provide the panelists with these questions and we have an opportunity to discuss it, I will open it up for additional questions from other IAG members. So panelists, are we ready to start with the first question? I will turn to Will to start off the discussion. Will, how are audit firms currently integrating AI into financial reporting and audit and insurance processes?
Yeah, thanks for the question. So our role in the financial reporting and assurance processes is obviously, as we've been talking, the audit of the financial statements and internal controls for public companies. You have to think about AI as an element of technology as opposed to a discrete thing. So it probably wouldn't be accurate to say something like we're using ChatGPT for audits or anything like that. It's more important that we think about the audit process as a collection of steps. And there are places within that process, particularly because of the amount of documentation that we both create and read as part of the audit process, where AI tools can be helpful. And they can speed up or make it more efficient or more effective to go through large volumes of information. That being said, the audit process is also unique because it does have rigorous quality controls embedded into it, multiple levels of review on working papers. Judgments that are reached by the auditor have to be documented. And so you really also can't say that you just turn the audit over to AI. There has to be auditors who review audit working papers and auditors who take accountability for different judgments that are made. So it's being integrated as part of the process as opposed to consuming a process, if that makes sense.
You're on mute.
What are your thoughts, Richard?
Yeah, thank you, and good morning, and thank you for allowing me to join the conversation today. I'd build a little bit on Will's comments in that I think the other part that is important to understand is that AI is a very broad church of technology. So it goes, again, for those that are students of history, it goes all the way back to the 1940s and 1950s with the beginnings of machine learning and robotic automation. And so I think, one important factor to understand is that AI is, and to your opening comment, a lot of people think of AI as synonymous with generative AI and ChatGPT and these technologies that we've come to learn in the last couple of years. But it really has its foundations in just a lot of the movement of processes, informations, and systems into a digitized economy. And so, I'd echo some of Will's comments around the fact that each of those parts of the journey have, over a number of years, been making their way into the audit processes. We've all increasingly seen elements of increased automation at registrants. We've seen an increased use of sophisticated and integrated IT environments. And what we have seen alongside that is the importance of this broad church of AI technology, whereby you've both been able to see an increased amount of the automation that occurs within those processes amongst the registrants' environments, and then the ability to the auditor to bring those technologies to bear in different parts of the process. So whether that's through just the initial understanding of how systems are integrated, the way in which system flows occur within an environment, and the ability for the technology to identify whether or not you've got sources of information that are important for the auditor to understand and assess from a risk assessment perspective. Whether it's the ability to, in some instances, move beyond traditional sampling techniques to actually look at entire populations of transactions and transaction flows to improve the auditor's understanding of how that information and how that data informs and impacts the ultimate reporting that registrants put forward. I do think that one of the things we've seen, especially in the last couple of years, with this acceleration of the technology and the democratization of the technology, again, one of the things we often talk about is this technology has moved from outside of centralized IT environments and much more across the enterprise. That has afforded both more requirements for the auditors to be aware of where that might sit within the enterprise, to how that might impact the risk assessments of the auditor, as well as then how the auditor uses some of these new increased tool sets within the toolbox of the auditor. But it does come back again to the comment we just heard, which is it's not about the displacement of the human, but rather an augmentation of the human's role and the important place they sit within the end-to-end audit process.
So Jen, I'd like you to weigh in.
Sure. So echoing what Will and Richard have to say, our journey has been pretty similar, but maybe what I'll put as a wrapper around that, and I think Will and Richard are alluding to it too, is our journey as auditors mirrors in a lot of ways, and of course is impacted by what our issuer, what our clients are doing, right? So they both mentioned the fact that AI is not new, right? That we've all been on a journey from both an AI and a technology perspective for a long time in terms of automation and emerging technologies. But we're clearly at this paradigm shifting moment, right? This thing is happening both in the world around us and our clients and for ourselves. But then also echoing what they had to say, there's something unique happening here about the real interaction between the technology and the humans and how we can all capitalize on that to really gain benefits, efficiencies, productivity, and then enable this refocusing on the areas that require the most judgment, require the most expertise, are higher risk. And again, we see that shift happening both for us and for the organizations that we work with. All of that together is going to require a lot of new behaviors and expectations and training and requirements for the profession, right? So it's a lot to keep up with. It's a lot of change. And it's happening on both sides of the house. I think that dynamic in of itself introduces a lot of complexity into what we're dealing with as auditors, but it's an exciting time certainly for the profession.
Yeah.
So Gina, I'd like to get your thoughts.
Yeah.
You're working at an auditor, but I think you have a number of perspectives as an investor and as a practitioner, basically using AI. So what are your thoughts on financial reporting and the use of AI?
Yeah, so I want to go back to some of Richard's comments about the fact that ultimately this has its roots in machine learning. And I think when a lot of people use ChatGPT for the first time, they mistake it as sort of something that thinks, and they don't understand that it is simply a probability engine. And how it puts its responses together is based on the probability that certain words come together in the same cluster. And ultimately, that means that you have to continually feed that in order to keep it from hallucinating and sort of putting something in order to form a full sentence. Insert noun here, and that noun can be wrong. Insert number here, as you said, James, you get to a wrong number, and that's what a hallucination is, which is to say that it has to still form sentences, and those sentences require all the different components. And ultimately, that probability mechanism is based on a body of work that it learns from. And it's quite easy, I think now, to sort of think that this mechanism has come a long way, because if you think about how much written literature there is to learn how sentences are put together, what words come after what words come in context, the verbal ChatGPTs are among the most advanced because it literally has 100 years of books to learn from. The audit profession, and to some degree the finance profession, spent part of its life in paper form. And so the ability to sort of teach and upload all of the information you had available, the opinion you came to at that point in time, that sort of training fodder is still being digitized. And so I think it's not correct to assume that the leaps and bounds that large language models are making are the same leaps and bounds that you can assume a named entity recognition engine can do in order to understand what information is composed on a receipt and how to reconcile that to an expense report as a very, very specific use case. And so, I think that we tend to make broad assumptions about how advanced this is. Anybody who's a practitioner who's in the business of trying to fine-tune models knows that there's still actually a big cosmos of information, and that these mechanisms learn off of a very, very complex mechanism called a human brain. If we are not regularly putting out information that the mechanism can learn from, eventually it is like DNA. It will consume itself and it will become flawed. And so I do kind of, and there is in fact, there is neuroscience out there that suggests that LLM models are already starting to display the same kinds of breakdowns that you see in dementia patients. And so it's worth noting that the constant interaction with human decision-making, human opinion forming, and human judgment is equally a part of this process, because it is just a probability engine. The use cases that we see in the audit that are sort of we're seeing in the audit profession are things like anomaly detection. They're things like enhanced sampling, being able to sample a larger body of information, being able to automate data processes, being able to reconcile statements, being able to understand policy rules and measure compliance better. All of these are specific use cases that would take humans a lot longer to do. And so the ability to use either an LLM or a named entity recognition model or some kind of CART model or some kind of topic modeling, all of that modeling can result in these outputs that can make and lessen the burden of the audit. But ultimately, I come back to the fact that I do not believe there is enough digitized information to truly train. And I think that these will enhance, but they will continue to flow through a mechanism of human judgment through the auditor in order to ensure that the auditor is in fact getting to the right outcome. I'll pause there. I have so much more to say, but.
And you will get a chance. So thanks, Gina, and thanks the rest of you as well. So I opened it kind of with a story about ChatGPT, and you quickly corrected me and saying, hey, AI is substantially more than that. And I think we do understand that, but I think the interest in AI came out of ChatGPT. In the discussion of the initial question, I think each of you talked not only about the current state, but about some of the challenges. And I'd like to drill down on those challenges a little more. So I will go to Richard to start off the discussion. What challenges do firms face when adopting AI technologies for assurance services? And so we kind of discussed a little bit of those, but can you drill down a little bit?
Yeah, I mean, I'd say in the first instance, I'll go back to my comment about democratization. So, the technology is literally on everyone's mobile device now, whether or not you actively downloaded a chat or whether or not it's just inherently behind the technology. And so I think in the first instance, I think the audit profession, we're in a not dissimilar position to the registrant community, where one of the first questions you're asked, or you have to ask yourself, is how are you actually deploying this technology across your workforce? And are you doing that in a very open environment where you just allow, and we've seen a variety of different models, even since that first explosion of ChatGPT, where we saw many organizations lock down the permissibility of these tools. Certainly, that's one of the things we did at Ernst & Young. We even saw nations stop the use of certain of these technologies. But then I think we saw a lot of organizations then move into a more measured way of actually monitoring and deploying the technology. And what I mean by that is it came down to the selection of a discrete number of technologies. It started to surface some of these questions around even what is the large language models that you might be using? Are those proprietary, or are they then encapsulated within the organization's own environment? There's a lot of conversations and concern both amongst registrants and within organizations around, are you passing the information back to third parties inadvertently because you don't understand the way in which these large language models learn and perpetuate that learning, as Gina just described. I think once you move past some of those, you come back to issues and challenges that aren't candidly unique to the technology. Questions of where is the data sources from some of this? How are you actually respecting the confidentiality and privacy of registrants' information as well as the individual's information? Because this technology has the capability to look across disparate functions of the organization, sometimes in a way that's a lot more effective than humans are. It can actually find pockets of data that exist that people didn't necessarily know were available to them. So that whole question of the identification and the transparency of the use of the AI becomes one of the first and foremost foundations that we find. I think then when you start moving through that, it comes to questions of where is their appropriate use of the technology? And again, still from some of Gina's examples, there are great examples where you're not necessarily having to use the generative AI technology, you're using more of the traditional AI to just be able to assess, read, consume large volumes of information at speed in a way that is additive to the way that we've done it through normal human behaviors. The ability of the human to actually just consume data has a natural remit to it in terms of we all at some point need sleep and rest, and the ability of the technology to lean into that and do that at scale is a very helpful way to augment the process, as long as you do it with some of those boundaries of understanding that it is being used, that you've managed the inputs to the data. It then also comes down to the training that you give the individuals. Again, once you've actually defined the use cases, you've determined which are the appropriate use cases and some of those foundational aspects, how are you actually supporting the individual to know not only how to use the technology, but how to use its outputs? And so one of the conversations we have a lot within Ernst & Young is, as you start to use some of these tools and capabilities, how does that alter or change the supervision and review that occurs within the work product? What is the responsibility of the person in the first instance to understand when they use a tool? Was it looking at the right data? Was it looking at the right sources? Was it coming up with outputs that are within the consistent expectations of what that user might ordinarily expect? And then how have they challenged those? How have they supplemented it versus just the risk that there is over-reliance on the technology? And then how do they make that apparent to those that are in the chain of command that have responsibilities for supervision and review in accordance with our existing professional standards? Those become really important aspects as you think about how the human and the technology interact. Then you, I think, go into, as you get a little bit more involved in some of the capabilities of, again, I'll lean into generative AI. We haven't mentioned agentic yet. People are going to hear this phrase agentic an awful lot going forwards, where there's an increase or pronounced requirement to understand, well, what is the technology doing behind the scenes? How is it addressing a problem? What is the ability to look behind the curtain of the technology and for the human to understand where all those inputs are? And then how does the human appropriately interact with, stress test, validate, corroborate, and ultimately not over-rely upon those technologies? Those are just a few of the things that I think, we spend, and I'm sure some of my colleagues from the other firms, that's where we spend a lot of our time even thinking about before we even start to develop, deploy, and put these into the hands of our practitioners. I'll pause there just to see, give others some chance to respond or react.
Thank you much, Richard. And Jen, would you share a couple of challenges that you see?
You're on mute.
Sorry. Yep. So what I was saying is, of course, what Richard said resonates, but I'll put it in a slightly different way. And I'll start with, we think of it in three phases. So there's the adoption phase, the use case phase, and the true transformation phase. And you think those are linear, they're not, they're quite circular at times. But in the profession, it is both a benefit and a curse that we are naturally skeptical individuals. And so when you start off with the adoption phase, Again, why I say it's a curse at times is our professionals look at this and say, well, this is not safe. This is not going to work. This is hallucinating, right? Especially James, I think back to your story, like we were a very, very early adopter of the capabilities of generative AI. We were very willing to experiment in productivity oriented ways and safe ways. Our view was, let them have it, let them see what they can do, let them open their minds, right? Because that's how you're going to get to the use case phase. But yes, as the assurance leader in that, I can tell you they were a very skeptical bunch, right? So it blocks the channels a bit. And all of what I'm saying, by the way, is the journey I see most of our client organizations go through as well. So then you get to the use case phase, and they have very specific ideas about what might be possible and what might be able to be done. But the reality, again, of this technology for our profession is if you want to move past base case productivity, right, writing an email, helping with your calendar, whatever, to get to the quality levels we need, to get to the confidence levels we need, to get to the scalability we want, and the true transformation potential, which, by the way, yes, I do think comes along with the capabilities we now see in agentic AI and things like that, which brings together all the other technologies we talked about, by the way. You're going to have to kind of quickly get out of that use case phase, get past those point solutions. And that's a harder leap for the average professional out there, by the way, slugging it out on an audit every day, right, and creating the brain space for that. And so, again, these are benefits and challenges, right? Sometimes it's good to pause and remember this human tech interaction that we're looking for, to have those moments to say, how are we going to adapt, review, and supervision? How do we expect our people to behave, to train, to be able to have healthy working sessions that are sector specific, engagement specific, to really think about what we want the future to look like. So I appreciate those skeptics and that ability to reflect on those issues because they are very important. But it also can create some blockers to what we do see as some real potential to, again, leverage this technology to enhance quality, to enhance sampling, to enhance data, right, to do all the good that we see coming. Again, like I said, the same cycles I see play out at our issue organizations as well.
Thank you very much, Jen. What are your thoughts, Gina?
Yeah, so I agree, Jen, with your comment that skepticism is our biggest our biggest ally and our greatest enemy. But I do actually think that skepticism is healthy and well placed. I think, when you think about utilizing these methodologies, one of the things that it does is it creates scale, as Richard mentioned, and it creates speed. And by that virtue, often you have to go slow in order to go fast. And the reason I say that is because if I create a very small sample of 100 kind of pieces of information, but I have slaved over them and I know that they are absolutely correct and they have had a lot of quality control on them, I will depend on that 100 sample a lot more than 100 million sample of which I am not sure if it is correct. And the problem with scale and speed is that it also can create errors at that same scale and speed in a way that humans can't recover from. In the sense that you actually literally have to scrap it and start over. And so I do think that going slow to go fast in technology is very valid. I know that the Silicon Valley view is go fast and break things, but I don't actually believe that is or can be the case in certain cases. I think that is important. And so, with that, it means that when you are sort of looking at how you employ these various methodologies and these various technology offerings, I think it is important to understand that this requires a whole different set of governance that is different from the rest of the governance you have. And that governance can help you figure out the right pace to get to that transformational phase. And I am actually still extremely skeptical of agentic code as an example. And that's just because I write code and I think that code is spaghetti. That's just me. But, I think that there are also, with that data governance kind of need, is also kind of the reality that there are still very real data security risks. understanding sort of what is happening to your information, whether or not you are containerizing it, whether or not you are ensuring that you're not committing it to some sort of public entity or body of knowledge. I think that that is equally important. I think that regulatory alignment, regulation does not move as fast as technology. And so regulatory alignment is a continued risk that I think we have to always take into account. And of course, there are just sort of the natural ethical, considerations as to whether or not we're introducing bias into the way that we are evaluating, just by virtue of replicating how we used to do it and no longer learning. And that is sort of that process of feeding on itself. And it is one of the reasons why I'm a huge proponent philosophically that the ultimate end winner is still going to be human plus machine. It will never be only machine, because only machine will begin to eat itself. That DNA becomes corrupted.
Thank you much, Gina. Will, you get to anchor this leg of the questioning. So what are your thoughts on challenges?
Yeah, so we've heard a lot about how we can think about whether a person should trust the output of a tool that has generative AI in it, and that's very fair. I mean, the thing that generative AI does really well is it kind of takes advantage of some inbuilt trust mechanisms we all have, which is if something is written well and is articulate, we assume that it has more truthiness to it than something that isn't. You could say the same for pictures and other kinds of things where you see this as a problem. And so teaching our people to not rely solely on those inbuilt kind of trust mechanisms is really, really important. The way you kind of handle that in a lot of cases is the design of whatever technology you're putting in place, the automatic checks, the certifications, the steps, the rigorous testing that you do, which creates a whole nother set of challenges for deploying this kind of technology, which I don't think is talked about quite as much, which is that when a new model is released every 3 months, you have to go do it all over again in order to then use it and be able to work with it and then trust it again. And if that happens again in 3 months, you're caught in this cycle of continuous upgrades to be able to deploy something that you can then trust and deploy at scale to not, like Gina mentioned, replicate errors out across a large population. So the pace of change is a real challenge, and that's not just for accounting and auditing firms, but for anyone that's trying to adopt technology into enterprise processes.
Thank you much. And I think that was a discussion kind of on the current state. We're going to move on to the future prospects for AI. So, and I'll start with Jen for this particular question. How do you envision AI evolving to tackle complex accounting and reporting challenges in the next 5 to 10 years?
Well, that's a really long horizon when it comes to AI. And what one of our colleagues says all the time is, one thing I know for certain is I don't know. So we'll start with that. But recognizing the path, the glide path it seems to be on, and what we think about as we're experimenting today and doing things in the sandbox, I think one has already been referenced, which is, well, we talked about the idea of agentic capabilities and technologies, and I'll say there's one specific type of agentic capability that we see already having some possibility and potential for us. So, the idea of an agentic framework and agentic capability, whether it's done in a, let's call it a center of excellence or sort of a centralized mechanism to be deployed at scale, or even, similar to how we think about ChatGPT and the like deployed on the desktop of every employee. This to us is just an enhancement of, again, the capabilities, the decentralization, the democratization, right, of potential for people to tailor, right, what is necessary to be done in an audit context, which provides this enhanced experience for our clients, enhanced response to risks as they materialize. I mean, listening to the conversation as we came on, I was at the audit committee of a client today, listening to the intersection of all of the trends and things going on in the environment. Like, if you think about the ability to on the fly respond, right, to an ever more complex environment, whether it's macro, our clients, changes in expectation from regulators in the broadest sense of the word, right, changing technologies, right, things going on in a smaller sense, like, again, there are risks, and I think in 5 to 10 years, by the way, we'll be better at addressing the risks too, which I think Will alluded to, and sort of like inbuilt capability on that. Apologies if it wasn't Will, someone did. But that's exciting, right? And it allows for higher quality at speed, and I think that's an excellent thing to look forward to. And who knows better at times, right, than our teams and how to do that, perhaps in a highly controlled manner. And then I alluded to like an example, right? We're already seeing live is these deep research oriented capabilities. And, I think if there's one thing all of us in the profession, I would argue would love to have more time to do is deeper thought. We would love our younger professionals, right, to be able to have the time to learn and research more. And we're experimenting with how it fits into the process of planning and understanding the organization and how we leverage the corpus of information. And Gina, I completely agree with what you said about the quality of what you might get right on the public information, but how do we transfer our own corpus, that reliable 100 pages of information or 100 pieces of information that we've gathered over years and years of working with an organization or sets of organizations, and how do we transfer that? Like, I mean, I think we all wish, the partners, the audit partners in the room know like how we long for the days where we sat down and spent so much time together because we had it, right, learning that. And how do we make that happen again? And how do these tools facilitate, again, human and tech together, like facilitate that? Because that it is an agentic capability, that research capability. It is not perfect, but man, does it give an awfully better start in a much shorter amount of time than anything I've ever seen. So that's one of the early things we see. And if it's a sign of what's to come, it's pretty impactful.
So Gina, what's your top of the mind thoughts on what we can expect in the next 5 years?
So, Jen, I love your comment that that it starts everyone at a different place. That's one of the potential values and promises that it has. And I think I'm going to allude back to a comment I made in our last in the last panel roundtable that we had with regard to the principal agent problem that happens within the audit profession, and the principals being the investors that we are trying to protect, the agents being the audit profession, and their sort of need to build in some kind of margin for the work that they do. And I think that one of the impacts that I see is that we are going to go through a period where technology will bring down the cost of doing a lot of the basic audit work that used to be done by the profession. And using Jen's kind of wording, will start the profession in a different place and potentially give the profession space to more deeply think about these issues. And so I do think that it has the potential not only to increase audit quality ultimately, but also to reduce that sort of conflict of interest in that principal agent problem we have within the profession, which is to say that it can help create more margin within the business. And I think ultimately give people more valuable jobs, in the sense that your job will no longer be to sort of check the box and work through the basics, entry level set of information of gathering documents and checking the box that you got the documents. At some point that becomes very, very numbing. And so I think the ability to be able to hand that off to a process that can start the auditor, at a different place. And also, to the extent that audit firms become better at training their own processes in order to infuse those processes with the intuition and the judgments being made by the senior auditors, it should also accelerate the learning of the junior, of sort of your more junior staff. And I think that will be a huge benefit. I think the challenge to getting to that utopia is that there is going to have to be a massive upskilling of the entire profession. And that upskilling is not going to happen overnight. That upskilling is going to happen. Much of the profession is at a place in their life where upskilling costs more in terms of time and effort. And I do think that that's going to be a little bit of a challenge that the profession is going to have to figure out how to get over. And the other challenge is that meanwhile, while we are all, while the audit profession is figuring out its own, AI governance or its own machine learning governance and its own processes, et cetera, you also have an entire industry and set of industries that are figuring out how to use AI for things like forecasts and things like, and meaning that you are not only going to have to be on top of your own processes, but you're going to have to learn how to audit those processes. And that's the other thing that I don't think that we're sort of prepared for, is that not only are you going to have to be just good enough to use it, you're going to have to be good enough to understand and audit its use in processes for that your clients are taking on board. So I'll stop there, but I think that we're in for a transformation, but that transformation is going to have that upskilling, the upskilling bumps in the road.
Thank you very much, Gina. So, Will, would you pick up your crystal ball and tell us what you see in 5 years?
Yeah, 5 years is too long to predict this kind of stuff, for sure. I do see, already proliferation of the chatbot type technology has already occurred, right? So that's already there. And maybe 5 years ago, we probably wouldn't have predicted that being here today, if you really think back to 5 years ago. Not just 2 years ago, which may seem like 5 years ago, but 5 years ago. So where will we be in 5 years from now? I do believe personal productivity tools will continue to advance and be more present in daily life, not just in professional life, but I think we will see that in professional life too. I want to talk about the reallocation of work effort. As what I did as a first year staff at auditors, as an auditor, no longer is that in the firm, and that because it was compiling binders and that kind of stuff. So that just doesn't happen anymore. So we've been through this evolution of redistribution of human capital against tasks for a while now. So I think that will continue. But it is very true that the companies that we audit will continue to become more complex, way more complex. And embedding these new technologies into their business processes, as Gina just alluded to, will make them more complex. And really, I think the only way that you keep up with that without throwing more people at it and increasing the cost overall substantially is by using the technology. So I view it as a flywheel of sorts, that we are just using the technology to keep up with the increasing complexity of the business ecosystem. And I think that's the primary challenge, and what will be on the agenda for the next 5 years as this proliferates.
Thank you much, Will, and thanks for the memories of what it was like to start in the profession before there was AI or text messages or a whole lot of other things. Richard, what are your thoughts?
At the risk of starting to get into talking about red pens and green pens, which some of us will remember of a certain vintage, but the first one, I would agree with. I think that time horizon needs to continue to be pulled in. 10 years, 5 years, I would even proffer that we should be talking about 3 to 5 years. And the reason I say that is because I'll go back to Gina's comment that it's not just the pace of change that we see within the profession and amongst the audit firms, it's the broader environment of what we'll see at registrants and are already seeing at registrants, and just the pace and velocity of the adoption of this technology across the enterprise that either indirectly impacts upon the financial statement audits or more directly through the financial processes is and will happen at increasing speed. And so I think just the capabilities of the individuals, the auditor, changing the nature of what we audit is going to be one of the most significant complexities that we'll deal with, as individuals have to have a much broader set of skill sets. They have to have, I'll go back to my comments about the identification and transparency of where this technology exists within the registrant's environment, and then the understanding of what to do with it when you find it in terms of how it impacts upon the audit, how you then respond to that will be a significant change, and that's coming at speed. I also think that within that time horizon, just the way in which the individuals interact with the technology is massively changing. Again, you know, we're in that fortune telling kind of vision of it'll come, but you know, the moment it's already moved from being handled through a central IT organization within the firms ourselves to a much more democratized way in which the individual teams are able to actually create and use the technology on their desktops, on their own devices. That's going to increase even just the practicalities of the fact that this chat experience of how we interact with the technology. You will not have to be a coder. You will not have to have that high degree of competency in the terminology of technology. You'll just have to have the ability to do this thing called prompting, which is really just asking smart questions or instructing the technology of what you want to do in a particularly targeted way. So even just the mechanics of getting rid of the keyboards and having conversations like this as the medium through which we'll interact with the technology will come into that time horizon at some point. I think the amount of automation that we give the technology, that's really fundamentally what sits behind this agentic concept, is how much autonomy do we give the technology to act on its own behalf, problem solving, and then how do we get more of the transparency into that? That's going to become an everyday experience that we have within the profession and amongst the registrants. I do think it's going to underscore the comment that a couple of people have made already, which is just we will see the skill sets of the individuals move from, again, we were an apprenticeship model. We've been an apprenticeship profession for decades. Some of the firms have been around for 120, 130 years. It's been very much built on learning through repetition and learning through repetition over multiple years and cycles. That's going to accelerate to the point where, to go back to Will's comments, you know, there will be things that individuals will no longer do or see. And then they will be responsible for supervising and assessing and concluding on the outputs of something they've never done. So even the way in which we teach our people is going to change as we start to have to use the technology itself to simulate these experiences. So people are going to learn about the technology through the use of the technology. And again, that's going to, I think, happen in a very, in a rapid environment in terms of the timescales we'll see. So I think just a fundamental retooling of what we do, how we do, and then how we assess it is really what we're going to see in that 3 to 5 years. Sorry, Gina, I see you.
Let's go ahead,
just
Gina.
wanted to build, James, if I could, I'd like
Yes,
to
you can.
underscore something Richard just said and underscore the importance of it, because the way that we learn, the way that this profession has learned has been through muscle memory. The way that we learn going forward will change, and you will have to have opinions on things you have never done. And that fundamentally is different. So the ability to simulate learning without necessarily doing the wax on, wax off of learning Kung Fu by waxing a deck is, that we will no longer have the time to be able to do that. And the question that I have always kind of had is, can we effectively do that, right? We will have folks who build things that will never understand some foundational concepts, or may understand it in theory, but will never have done it in practice. And I do think that there is going to be a push and pull in the process of learning.
Thank you. Thank you very much. Given this conversation, I want to move on to a different future topic, and that is, in the future, will auditors essentially do the same job and provide us the same information, a pass-fail audit report, or will we see more from the auditors because of this larger capability, such as enhanced fraud detection, compliance checks, predictive analysis? Are we going to see more given this enhancement in technology? What are your thoughts, Gina?
I was wondering which question was going to land on me first. You know, I think that there's no doubt in my mind that the profession will evolve and that the product, the work product of the profession will naturally evolve with the capabilities that the profession will be able to do. I have always viewed audits and audit findings very similar to tectonic plate movement, in that tectonic plate movement results in, for anybody who lives, I live in California, so I know a lot about tectonic plate movement, is that you can have lots of little small earthquakes, and that means that you're sort of evolving along the process. However, when there are no earthquakes, often it's because there's a bigger earthquake coming. And that's how I see findings. I think it's healthy for an organization to have small findings. I think it's unhealthy for an organization to have no findings and then eventually have a big explosion. And so what AI and adding AI to our process can do will potentially, hopefully, find smaller and smaller and finer opportunities to sort of release tension in the process of whatever process and create improvements at a finer level, right? I do think that the potential for the role of audit as a learning mechanism for an organization, I think, not just as a matter of providing a quality assurance, but also I've always believed that this has to be an evolving learning mechanism for the organization and a, sort of an independent set of eyes with the intention of with the protection of the investor at their core, that always provides learning opportunities. And so I think when I think about what is the big impact it could really have, I think the big impact it can have is that it can fine tune where we can find opportunities for improvement before they are a headline in the Wall Street Journal.
Thank you much, Gina. And Will, what are your thoughts?
Yeah, so I mean, as this group well knows, the relationship between what an auditor reports, what our clients, investing public wants, what the companies we audit are responsible to report on, and what regulators want is a conversation that has lots of different tension points on it, one of which being cost. And so I think your question is, could something that people generally have wanted become no longer cost prohibitive to provide because of the advances in technology? And I think it's certainly a possibility. I would hesitate to try and predict where that will play out. Already in the kind of extended ecosystem of business relationships, we see lots of call it assurance types of opportunities that come up. They may not be public reports, but they could be third-party assurance reports, agreed upon procedures, different things that accountants provide to help establish or maintain the trust between companies that are doing business with each other. And so is there more of that, or are we talking about a public report of some sort? I think that's an interesting debate, and it is very possible that the technology does make some things that were previously untenable because of the cost to do them now possible.
Thank you much, Will, and I'd like to get your thoughts as well, Richard. Will brings up a point, and as part of the question, it was fraud detection. I mean, so basically, auditors are not responsible for detecting fraud, but with the advance in technology, could this be something that could be added? Like, what services do you expect to be able to offer the market given this enhanced technology?
Yeah, I would start. I'll bring it back to. I think in the first instance, before we think about what would be expected of the auditor, I think it's to think about what will be expected by investors of the registrants and the organizations themselves. Because I think one of the first things we'll see is as some of the capabilities we talked about today, I think stakeholders will look to the reporting entities themselves, and I think they will expect more things. I think they will challenge both the breadth and the depth of the information that is now available to them as investors. in a way that there has always been that conversation and that dialogue between the stakeholders. But I think now some of the cost barriers, some of the capabilities, I would look there first, because I think we will start to see questions of the depth of information that's provided, the timeliness with which that information is provided, because the process has now become that much more efficient. Even potentially the frequency with which that reporting occurs will increase. I can imagine that the request for that and the demand for that will. I think then what the auditor is asked to do will to a certain extent be a reflection or will align with some of that journey, because as stakeholders ask more of the organizations themselves, I think the fundamental tenet, that fundamental covenant of putting that information to the scrutiny of third-party verification will be the complement of that evolving landscape. And to Will's point, whether that's through the traditional audit mechanisms, whether that's through other third-party reporting, whether that's for internal consumption, whether external consumption, I think that will be part of the dialogue and the expectation of the audit community. I think on specific questions like fraud, it's another example where it's not a static environment. I mean, we talk about the fact that there is an arms race because of this use of technology between the fraudsters and those that are seeking to detect and report and shine a light on that fraud. As soon as, you know, AI with all its capabilities came to light, there was obviously communities that saw the opportunity to exploit it for all kinds of reasons. And so I think the goalposts will continue to move within these landscapes, and the expectations of then what is asked of the various communities involved in that will continue to evolve. Quite where it will land and where the natural points are within those points of tension and conversation between the stakeholders, that would be a crystal ball indeed. I'm not quite sure where we'll land, but I do think that will the trajectory and the pace of those conversations will accelerate.
Thank you much, Richard. And Jen, you get the last word on this one.
Yeah, so in a conversation about AI, this might be the most biased answer I'll give today. I'll be transparent on that. I feel really passionately about this topic, and I think the profession has so much to offer to what I think everyone has alluded to as a rising expectation from stakeholders, investors being a very important stakeholder, but there, as we've all alluded to, there are others in the equation here that have had a rising voice. And what I think I've noticed over my time in the profession is that AI is not the first topic that has come to the table, right? Where there's diminishing trust, and there's a demand for more trust, and there's a demand for more transparency from companies, and our role in providing confidence to that transparency in a world where things are eroding, as we know, over time. And so if I look back, it's, there's been questions around data privacy, there's been questions around cyber events, there's been now we're talking about AI, resilience, like we could go on. But what I do notice is that over time, like with each of these new issues emerging, there does seem to be more of a call for some independent body, right, to be involved in providing some confidence in the information that the organization produces. And I think with a little more awareness each time that perhaps the parties that have been dependent on in the past to do it are not quite to the, again, biased, quite to the caliber of the independent auditor and the role that we play in the financial reporting and life cycle that's existed for many, many decades. And in fact, direct comparisons to the effectiveness of this regime and versus perhaps other transparency regimes that are maybe not as effective as people would like them to be. So I mean, I'd say, yes, of course, that's how it should turn out, but that's a very biased answer because that's how I'd like it to turn out. But what I'm conscious of is that I think it's a separate question of should it go through the eyes of the financial reporting process. I'm not so convinced that that's the right answer. We do have risk of material misstatement. We do have impact on the financial results of the organization. And a lot of those topics I just rattled off, it's a fair argument that while of interest, they are not always of material consequence in the financial reporting context. And I think that's we could debate, that is a fair debate, but that doesn't mean I don't think we have a very important role to play in again, building trust and confidence in how the environment works.
Thank you very much, Jen. Now we'll move into our third and final kind of broad area and focus on broader themes. And when we do that, given that we're talking about financial markets and regulation, it's appropriate to basically focus on just that. And so, Will, are there specific regulatory challenges to adopting AI technologies globally. And so we've spoken about AI and basically the opportunities and the challenges, but basically let's focus specifically on the regulatory environment and what we expect from it.
Save the easiest question for last on that. So, I think the understanding and regulatory framework for AI globally is uneven. Maybe one way to say it. And so in deploying technologies at scale in an organization or enterprise, having to work with different regulatory regimes makes it more challenging, even if your auditing standards happen to be the same. So everyone's auditing under international standards of auditing, but there could be data regulations or other kinds of regulations. I think Richard mentioned it. Certain countries said no thank you to generative AI when it first became a topic, and so having to work within those boundaries makes it more difficult. One thing that is built into the auditing profession that I think maybe is overlooked sometimes is when it comes to data and privacy, auditors have a duty of responsibility built into the standards under which we are licensed and operate to keep information confidential to engagement teams and those who need to know or are part of the quality control framework within their auditing firm. And so you have these built-in containerization of data that occurs that maybe with other organizations you wouldn't expect it, but we build that into all of the technology elements that we have. So in some ways, some of the requirements that you see about maintaining data in certain jurisdictions are things that we have to deal with, anyways, which is helpful in terms of scaling out audit products kind of globally. But at the same time, you are dealing with a variety of changing regulation, which is what makes it really difficult to go faster.
What are your thoughts, Richard?
Yeah, I think I like Will's phrase of uneven, because I think that's a good way of describing the regulatory landscape. But I think one of the additional challenges I'd offer is that when you get into a subject like AI, and again, we've talked a lot today about some of the risks and challenges that are inherent in this technology, we already see an explosion of various different regimes and responses of how to address and how to understand and even how to ask for various degrees of reporting against that use of the technology. And I think one of the challenges is that when you kind of look at it across a very broad landscape of frequently people and stakeholders from outside of traditional financial reporting mechanisms, the term of assurance and what it means to be audited or what it means to subject this technology to third-party verification has very, very different meanings in very different contexts. And so I think even the very nature of, and again, we're biased, I'm biased. We come from a profession where I think we recognize the rigor of the standards against which we apply. We recognize the robustness of everything from the training mechanisms all the way through to the governance, accountability, and inspections that we put across our processes. But those are uneven across these different mechanisms. And I think one of our challenges is where should that water tide or that water level of expectations sit? And there's a certain element, and we're seeing different markets and different geographies trying to set that, where in some instances it's a compliance requirement through regulation. We see other environments where it's left more to a voluntary set of codes and conducts. And we see instances where it may be in some, the use of the technology itself is considered more of a competitive advantage or differentiator versus in other environments where it's viewed as a threat and challenge. And so I don't think there's going to be a single answer to any of those. I think it's going to, that patchwork of complexity, again, isn't unique to the technology. We've seen it applied in different areas and different topics over the years. But I do think we have to recognize that overlay exists to all of the other things we've described, not least of which is the speed at which the technology evolves. So even if there were to be some uniform view of what compliance, regulation, reporting should look like, it almost becomes out of date the moment the ink gets dry on the standards or the frameworks, because there's been some form or new iteration of the technology that risks making it outdated. And so I think the practicality of this will continue to evolve. I think we've seen through history how the markets themselves and investors gravitate towards through again, the quality of the verification that third parties can bring. I think, unfortunately, I'll go back to the analogy of volcanoes and tectonic plates. We've unfortunately also seen the consequences when those fissures give rise to explosions. And hopefully, again, we can learn from history and get to the point where we don't have to wait for the explosions to recognize where should be the balance in the ecosystem.
Thank you much. What are your thoughts, Jen?
Yeah, I mean, first off, completely agree with Richard's point about the unevenness as well as the challenges with the lack of understanding of what it means to be not just audited or assured, but tested, validated, monitored, right? There's just a lot of words out there with uneven understanding of what they mean, as well as uneven understanding of the technology, not just in the beginning, but also the speed at which it's changing, and therefore what the risks are that we're really all trying to mitigate against. Us as a profession, by the way, as well, and then our clients and constituents outside, and the speed at which any regulator will be able to keep up with that and expectations, which I think, to be candid, they haven't yet, right? I mean, there's a lot of ideas and thoughts and frameworks out there, but not a lot of detailed implementation guidance, which is what everybody needs to be successful in complying with something. But what I also worry about is just the technical capability of any regulatory regime, coupled with, to understand, again, like how the risks manifest, how to keep up with it, how to effectively mitigate and deploy compliance against it, but then also the real business context in which things are used. I think there's a lot of good signs, by the way. Most things we've seen are very risk-based in their expectations, but some of the things we saw, for example, in the beginning, I believe reflected a lack of understanding of where the risk sat, right, in the various parties in this entire AI ecosystem. Again, things get better over time, but to me, that was like an early warning shot of well-intended people are putting things out there, but if they don't understand where the danger, right, really occurs, right, we're going to end up in a pretty awkward place. So again, I think we all want clarity. We all want something that levels the playing field globally or amongst different size and scale organizations in any profession or any sector. Again, detailed expectations always help, but without flipping over into over-regulation that makes it challenging for anybody to have success with these technologies. But that's, I think, the unicorn everybody's always looking for when it comes to something new.
Thank you very much. And last word, Gina?
Yeah, I think, when I think about how regulation is formed, the sort of political process through which regulation is formed, it tends to be fairly tactical and often without a broad enough understanding of the more strategic elements of what the regulation tends to put in place. And I think that's where you tend to have over-regulation, where you have rule after rule after rule after rule addressing issue after issue after issue after issue. And the issue that I have with the potential that technology has is, while it has the potential to do great good, it also has the potential to do great damage. And I think that the sort of, the beginning of the Hippocratic Oath probably is one that we should think about here, which is first do no harm, primum non nocere. And I think that is almost unfeasible in the way that we do regulation, because a lot of damage can be done in the sort of intervening time it takes to learn about what could cause that damage, which is to say that regulation has to become more strategic and provide sort of, let's call them general boundaries, concepts, and principles, rather than try to tactically address each issue as it goes, because it will be a game of whack-a-mole where literally a million moles will come up at the same time.
Thank you. That's a great analogy. I'm enjoying our discussion, but we're now at the final question that I will ask of you, and then we'll turn it over to the other IAG members to ask any questions that they may have within the time available. So for the final question, I'm going to go to Richard. Does this technology make the audit profession more or less relevant? What are your thoughts?
What a softball. Thank you. So I'm an optimist by heart, and I think when it comes to the end of the day, the human wins out every time. And I think that the human wins out really for a lot of the reasons we've talked about today, which is the technology has the ability to displace the functions the human does today, which are rote, that are repetitive, that are routine, and candidly are probably not the kind of things the human is best tasked to do. We get tired, we get easily distracted, all those kind of things. And so I think the technology has the capability to do amazing things, but its place within the broader ecosystem is always going to be alongside augmenting the human, not displacing the human. And I fundamentally believe, and from an Ernst & Young perspective, we fundamentally believe that we're not blind to the challenges and the risks that arise from the use of this technology, both amongst the registrant community as well as within internally as we deploy and develop this technology. But we also believe that if you put the human at the heart of it, and you understand how to put all of the checks and balances in the process, will actually make the profession much more relevant than it's ever been, because we will be bringing human judgment, human expertise. We'll be bringing all the things that we got into the profession for, with the exercise of critical thinking challenge and intellectual challenge to our day-to-day jobs, will be the pronounced and the new requirement, and not least of which to keep with the pace of change that we've all been talking about now for the last nearly an hour. I think that makes a much more attractive environment for anyone coming off campus to want to join this profession. I think personally, for those of us that have been in this profession for a while, it has been the experiences that have kept us involved, engaged, and wanting to do more. And I think it will complement the activities that occur at the registrant community, where, again, we're going to see this technology deployed at pace. And just in order to satisfy our day-to-day responsibilities, our existing obligations, and our important role within the investor community, it's going to require us to evolve. And I think when we get that pressure in the system, I think it makes for a compelling and an exciting opportunity. So I'm all in on the positives.
Thank you much. And what are your thoughts, Jen?
Yep. So I'm an optimist too. I agree with everything Richard had to say, but he also alluded to the awareness of the risks that we face. And I guess the one that I would highlight, and the disruption risk that we think about every day, unfortunately, is the general trend I think we see in the world of the devaluing of the expert or the specialist. And for people who don't do what we do and don't understand actually what we do every day and the experiences we've had, the value of them, and the complexity we deal with, the boardrooms we sit in, right, all of that, they think we tick and tie with those red and green pens, right? Like that they don't understand. And therefore, we joke all the time around here, like there's some kid in a basement, right, figuring out how to do what we do in some data-driven way. But that's not what we really do, right? Like, and that therein lies the disruption risk and the challenge. So how we solve that, I don't know, we spend a lot of time thinking about it, and I'm sure my colleagues do too, but that is to me the risk. And that unfortunately is not unique to this profession. That is a cultural issue in general, but I still, my money is still on the human and the technology combined. It's not the first time we've gone through a big technology change. I think most of the people on this call have lived through many of them, and we'll persevere, and the profession will as well.
Thank you much. And your thoughts, Gina?
Well, I think I stated my philosophy pretty early on, which is that the winner, the winner in the ultimate chess match will be human plus machine. I do think that that what we are experiencing is tantamount to what happened with the mechanization, in the industrial era. And, there was a whole cult of Luddites that were concerned that they would not have jobs. And what it did was free up the profession to add more value. And ultimately, while going back to my chess analogy, while the sort of chess, the sort of the ability to augment human capability, so to think a lot of chess moves in advance, one of the fascinating outcomes of these chess matches is that the worst outcome for a chess master is someone who makes random movements. And so that capability to creatively solve problems still largely rests in the mind of the human. And that notion of creativity has yet to be has yet to be simulated. And I do think that what we will see in services generally, not just the audit profession, but sort of that notion of devaluing the expert, Jen, I think it's a danger, but I think that's also that's the equivalent of the Luddite saying our job is going away, when actually what it will do is free up greater room for the expert to be expert and not take up their time doing mundane tasks. And I would ask yourself, what would you do with your time if you didn't have to do all the mundane tasks you have to do every day? I spend at least, an hour or more every day just dealing with my email. And so, you think about what could I have done? What is the cost? And what is the sort of opportunity cost of what I could have done with that time? And I would say that is what the expert industry, sort of the services industry, I think that's the renaissance that we are in front of. And so, what does that mean? What is the future? I think that a point that Richard made earlier, the notion that while we may be in the business of ensuring that the numbers are valid, there is an equal and more nefarious version of this, that there is a whole entity, a body of participants who are equally using these methodologies and these technologies to do bad, to defraud, to work against the greater good. And I think that ultimately, the ability to find and catch those thieves is equally important and will call on all of our creative skill. And I think ultimately creativity will win.
Thank you much. So Will, you get the last word.
Maybe to take a little bit more of an abstract view and kind of put a pin in financial statement auditing for a second. We've talked here about how these technologies can be used to give people the wrong information, defraud them in some cases, create disinformation, misinformation. There's more people at risk of those kinds of events happening now than there were in the past. And if you think about what auditing is now, put aside financial statement auditing, just pure auditing, it's the verification of one piece of information to another by an independent third-party objective party. That's the antidote to the problem. The question only becomes, when is it worth the cost? And so if you think about the role of auditing in general in society in the future, it could be much more relevant to have more audit-like procedures by an independent party because the risk of being misinformed is higher. Now, how that manifests itself in which products and which way, is it a CPA, is it an accountant, is it something else? I don't know. But I think when faced with the risk of meaningful information that's false making its way into decision-making that is risky and material, the antidote is a third-party, independent, objective observer doing a verification. So I think it's more relevant, not less.
So thank you all. That was a good way to size it up. And now I will open it up to the other IAG members to see if they have any questions of the panelists with regard to the opportunities and challenges of AI. And then I'm asking staff to open it up as well. I'm not seeing anybody just yet. Yes, George.
Yes, thank you, James. A great session. If I may, I was reflecting on the conversation a little bit ago in it when we were talking about the apprenticeship model, and I got piqued by the red and green pen, so I had a little flashback moment there, Richard. But I was thinking about the simultaneous training and the apprenticeship models I mentioned, and then I started thinking about professional skepticism. And it's one thing maybe to train someone, how to audit a bank statement or a bank reconciliation, the practicality of that. But the more conceptual kind of professional skepticism and what I could envision if you kind of play this out, maybe the human bias might be, well, it came from the machine's always right. And therefore I just take it and I run with it. And I may not have the same level of interaction looking at body language across the table as things kind of moves. I'm just curious, as you think about training and maybe the risk, whichever way you want to think about it, how you think about professional skepticism from the kind of traditional core audit responsibility and what that individual auditor is doing on a day in, day out basis. Thank you.
I'm happy to start if you want. Okay. So it's a great question. And it's, by the way, one that I've been thinking about even before the advent of AI, because I think the training on professional skepticism is one of the most important things we do. And I think that even in we think about COVID, you think about the advent of technology and automation in general, right? Frankly, the volume of work that we do in the audit versus the time we have to do it. These are all challenges that have frankly poked at, right, that need for a while. So AI just is going to possibly make it harder. So the first thing is it's automation bias that you're referring to, and we talk about it a lot. We work it into our training, not just at a broad level, but in terms of anything we think about releasing to the practice, we will talk about specifically, like in this case, right, this is the danger you might run into from an automation bias perspective with this particular tool, and what to look out for and what particular human in the loop activity. This gets back to like what review and supervision do we need in any particular case. On a positive note, what I'm really looking forward to, I alluded to this earlier, and I've seen it already in practice, is with more time and more focus, when we talk about focus on high value things, I've already seen it, I have more ability to take our younger professionals to meetings, to conversations, to say like, that's what just happened. Like that was professional skepticism, right? That was using the auditor gene, as one of my mentors refers to it as. So it's absolutely a challenge that we have to train to address, but it's also an opportunity to have it happen more naturally in a good way.
Go ahead, Richard.
So I was just going to add, I mean, I think the other thing to remember though is that we've talked a lot about the technology's bias. Humans have bias as well. And so I think one of the things that I actually think is very positive about these technology is it allows us to look at much more disparate data points within the ecosystem. And then it allows, and I'll come back to how do you maintain that skepticism, but it actually allows the human to now consider a much broader population of things than they might otherwise have done, because we all have human biases where sometimes we miss, those flags, we miss those, we misinterpret those body languages, or we even feel an affinity to anyway. So, I think smarter minds than I have done a lot of studies on those issues. I also would go back to the comments we made around the ability to simulate learning experiences actually gives us a much more consistent way to help train our professionals, because you can actually put them into these environments. I'll give you an example where we're actually working with a simulated experience of how to do a virtual inventory count, where you can actually create an environment where the professional could, in a virtual reality world, do an inventory count, miss those false flags, miss those things where you can actually go back on a consistent pattern now and actually train them and say, that's where you missed that moment of skepticism. You walked past that inventory that was apparently obsolete or that wasn't clearly demarcated. And you can do it in a much more consistent way if you scale it properly than even our current apprenticeship model. Because again, our current apprenticeship model is still only predicated on, and we've all had great mentors and coaches in our lives, in our professional careers, but we also know that there's sometimes a disparate quality and consistency in that. Now you've got the ability to actually use the technology itself to get a better and more informed way. There's not going to be one single silver bullet to this, but I do think that I think the recognition that maintaining professional skepticism isn't going to happen organically. It is going to, again, we're going to have to do different things in different ways, but I even think the technology itself can actually help support some of that.
So I agree that I think the technology can support that skepticism, but I don't think that you can simulate skepticism because I think it's actually quite a nuanced behavioral kind of mechanism that humans do, and that it's actually inbuilt into our DNA, meaning that how we develop that ability to know whether or not to lean into or lean away from a particular view or concern. I think that is going to be, I think, impossible to simulate. I also, the way that these algorithms are working, I'll just speak from a technology perspective, these algorithms are designed to please you. That is what they are. They are designed to forecast, and they want you to say that they are correct. And so how you program them can also build in its own biases as well. And let's not forget that many of the really important findings that we have been through the process of human trust and whistleblowing. And most of what we learn that really tends to lead to really kind of tectonic moments has often been the result of that human interaction. So I do think that the role of the human is there. Humans do have biases. I think that these algorithms do unbiased, but I just want to underscore that the nuance of skepticism, I think, is challenging.
Any additional questions?
Yes, I do. James, this is Steve. Thank you very much. I thought this was an awesome presentation. Would you envision over time increasing client profession on the audit profession to achieve, dare I call it, AI economies of scale, thereby driving fees downward over time?
Yeah, I'll take that. So I think that the conversation about audit fees is one of, kind of puts and takes every single year that you sign up to do the service, which is, what do you have to do? How are you going to do it? What are your inputs to it? What's a fair margin for it? And certainly efficiency, whether you gained it through institutional knowledge on that particular company, deployment of a new technology, a reduction in the reporting requirement for the entity being audited, those kinds of things drive costs down. And then offsetting that is, general inflation. But then on top of that is the increase in scope. And then in most cases for your bigger, more dynamic companies that are always changing, an increase in what you have to do. And so if you kind of look at the audit profession, what you see is, despite all this change that's occurring in the environment, you kind of see inflationary increases in fees in most cases. And so could it drive faster decreases in fees? I guess it's possible. You do also have to take in consideration the cost of the technology itself, which
Capital investment, yeah,
has not been cheap. And in this particular case, if you look at some market caps and whatnot, but but it is an offsetter, and that's kind of the purpose, to be able to keep up with what are increasingly complex client situations that need to be audited.
The other comment I might just make is, I do think that cost of technology. I mean, I sit in Silicon Valley, in Virginia. Software companies, they make an awful lot of investments up front when you're in the and so I think what we're going to see is that conversation with the auditee around, to Will's point, what did it take to do the audit? It's no longer going to just be the labor hours involved. It's going to be the complement of the labor plus the technology and the transparency that we bring to the recipient of that around how they complement. That will raise the challenges of, well, is there the value in the use of the technology? Is it just being used as a replacement for the lowest common denominator of the task, or is it also providing some of this expansion potentially of what we talk about in terms of the quality of the audit? And so I do think it's not going to be a same store sales either. And so I do think that conversation with what is it being audited, what is the confidence and the confidence, the trust that can be derived from the way in which the subject matter is audited will come much more to the conversation. That being said, there is absolutely the pressure in the system that is, well, because you are automated, therefore my cost must go down. That is something that we as a profession spend a lot of time thinking about. I think, as I'd hope we would all agree, is driving to the lowest common denominator does not satisfy the fundamental obligation, which is trying to give that confidence back to the investor community, which is obviously our charter.
I obviously agree, but I'll add one more nuance at least we see. I'd be surprised if my colleagues didn't as well. I think as we become more technologically based in a more transparent way to these organizations, a trend that already started even before this AI moment will continue, which is perhaps being seen more like a technology service provider or a different kind of service provider than we actually are. I don't think we object to being lumped in perhaps with lawyers or sort of other professional knowledge worker type consultants when we're being evaluated for the fairness of our fees to an organization. But when it trips over into being evaluated in the same way as like a payroll provider, for example, like it just becomes a very difficult conversation. Back to my point about expert services, it's, you know, again, with all due respect to what organizations have to do to keep their costs down, like we certainly understand that and we know where they're coming from. They're at times more difficult than they should be, again, to the role that we actually play in the capital markets and protecting investors when we're having them with people who fundamentally don't quite look at us the way we think we should be looked at relative to other types of organizations they might be evaluating for cost.
And I'll just chime in, Jen. I think that's such a good point. I do think that services at scale becomes a volume play, and so the question that comes with that is quality. But I would also say that this deflationary kind of pressure that is not just on us, but also on the technology industry, the sort of need in order to do scale and maintain margin, you often, have to also kind of continue to become more efficient. The question will be, the question is not, do prices fall? The question is, can the costs fall more? Because you can actually still envision a world where the margin is actually still better to do it that way. And so, I would not shy away from the notion. The need, I think, here is pretty unlimited in the sense that what we need and what will be demanded will continue to increase over time. And how we give that and at what price, I think the bigger question that every service providing industry is going to have to ask themselves, but the audit industry in particular, is can you do it and can you continue to improve that margin in this moment?
Yes, thank you all very much. And this is a great time for me to thank the panelists. Thank you, Will, Jen, Richard, and Gina for sharing your expertise. It was a pleasure being with you. And seems like we just get started, but it's time to say so long. Thank you much.
Thank you.
Thank you, James. And thank you to our esteemed panelists for a very insightful discussion. We'll take a quick break and be back at 3:30. Thank you.